Economist here. Oh, wow, look, 5 of you already up in here and 2 likes. Thank you for hitting that like button when you come into the live stream. It helps YouTube algorithm pick up the video, start spreading around for more people to come into the chat. So I really appreciate it when you hit that like button when you come into the live stream. Thank you. What are we talking about today? Federal Reserve and the rate further. This is really what I think is probably going to be on a lot of people's minds over the next year, as the Federal Reserve has paused the interest rate hikes, but has promised that there would be 2 more. At least that's what they have signaled, right? Because they don't use credible threats or forward guidance anymore. But that's what signaling is a credible threat and forward guidance. That's exactly what it is. So one of the things that we had talked about just recently when it comes to the Federal Reserve and the interest rate setting policies is the neutral interest rate. Now, this is something that I've tried to talk about and describe, but there is no such thing as a neutral interest rate. Like, there is a neutral interest rate, but nobody knows what it is. There's no chart that you can go to that says, yes, this is the neutral interest rate, in which that the Fed funds rate, the rate that that the Federal Reserve sets themselves, when that rate is no longer accommodating nor restricting the economy. And nobody knows exactly where this rate is. Now, there is, a few economists out there who have come up with these formulas that they have determined what the neutral rate is. But that neutral interest rate, it really is a forward-looking projection of what interest rates are going to be in the future and what inflation expectation is going to be into the future, and then what the interest rate from the Fed funds rate is going to be at that same time. That is neither going to be restricting nor accommodating the economy, and all that is very confusing to try and wrap your head around. So just trying to understand like how it is that the Federal Reserve even sets a Fed funds rate. Like, what is the Fed funds rate and how does the Fed set this rate? And even this is really confusing to try and wrap your head around, because everything within the banking system is very confusing. I mean, you also have to think like all these different aspects that kind of intertwine with the economy. You got monetary policy and fiscal policy, right? Monetary policy is the Federal Reserve adjusting interest rates. Fiscal policy is the stimulus programs coming out of the government, right? And so these are two very separate things, but yet, both affect monetary, supply, monetary interest rates, stuff like that, have all take place together. Now, obviously, like, the government wouldn't be able to do the spending that they can if it wasn't for the Federal Reserve accommodating that situation. So these two work, together. But when it comes to setting of the Fed funds rate, that's not the government. That is the Fed working with the big banks. And what they are doing is, well, let's see here. The easiest way to describe it is to actually step it back, because really to try and understand it the way it is today is just even more confusing than the way it used to be. So if you can imagine back, prior to the pandemic and everything taking place, there was the Fed funds rate was working in what they refer to as a limited reserve system, right? Now, coming out of the quantitative easing, they had set the banks to have a set amount of reserves, right, within their balance sheets, on their books. And so with this limited reserve, at the end of the day, some of the big banks would be in need of reserves and some of them would have excess reserves. The one who had excess reserves would lend them to the ones who were in need of reserves until everybody balanced out so they could do business the next day. And that overnight lending rate, which is what it's called, the overnight lending rate, was the effective fund rate, which is the Fed funds. Because the Fed fund rate is just nothing more than a target. It's an imaginary number as well. It's not imaginary. I mean, they say it. This is what we're shooting for, this target. And then they target that by adjusting the amount of reserves these big banks had on their balance sheets, on their books. And the overnight lending rate could be adjusted by how much the Federal Reserve would buy and sell of these treasuries or reserves off these big banks. So that's the way they used to set the Fed funds rate, or the effective funds rate, which is really what it's called, which was that overnight lending rate coming from the big banks. Since the pandemic and the quantitative easing that has recently taken place and the flooding of the banks with all the money and everything that's happening within the system, that they had taken a limited reserve system to an abundant reserve system, which meant that at the end of the day, some of these big banks were no longer in need of money, right? The ones who had excess, reserves didn't need to lend them to the ones who had no reserves because everybody had plenty of reserves. So then that money went back over to the Federal Reserve to an account called, well, let's see, excess reserve. So it was the money that went back to the Federal Reserve in the account of interest on excess reserves. They could either go there or they could go into the repo market. And between these two places where the big banks could park those excess reserves, they were able to channel where the effective funds rate would be, which is the Fed funds, right? So between these two accounts and the interest rates that are set at those two, they were able to channel it. And I think, if I remember right, I believe they called this a belt and suspender way of doing it. If I got it right, but I can't remember that exactly. But it was something to that effect. So this is where they actually set the interest rates now, is back over at the repo market and that interest on excess reserves. And then if they ever need reserves, they always got like the discount window and stuff like that they can open up to for emergency lending purposes and stuff like that. However, this neutral interest rate, this was a very big thorn in the side of the Federal Reserve, because the neutral interest rate is when that effective fund rate, that Fed funds, is neither restricting nor accommodating the economy, and it's neutral, right? And since they don't know exactly where that is, the estimates of it were really low, like somewhere between 0 and 2%, depending on who you were talking to. Now, when you talk to most economists out there, it was kind of the idea that it was somewhere around 2 to 2.5%. But John Williams from the Federal Reserve was talking about this global neutral interest rate being somewhere between 0 and 1.5%. This is not a good situation for the Federal Reserve to be in, because when it comes to stimulating the economy, the Fed would typically want to drop that Fed funds rate around 5%. So if you can imagine these big banks all of a sudden had access to money, 5% interest rates less than what they were getting before, now all of a sudden they have the ability to start lending money out there a whole lot cheaper than they did prior, right? This is the stimulus coming into the economy. And that's how typically the Federal Reserve would try and stimulate the economy during recessions, is they would drop that Fed funds rate around 5%, and then people would get, excited about buying houses and cars and going on vacation and doing stuff like that. So this was the way that the Fed would stimulate the economy. But with the neutral interest rate so low, they had a very difficult time trying to get what they refer to as their ammo, right? Or what a lot of economists refer to as their ammo, which is the interest rates at the Fed funds level above the restrictive level of the neutral interest rate, right? So the farther they got it above the neutral interest rate, the more restricting the economy would be. But when they got it above the neutral interest rate, they found themselves at like 2.5%, right? And the Fed funds did not have enough room to drop it to stimulate the economy. So they were at 2.5%. We start rolling into some bad times towards the end of 2019. I don't know if a lot of people remember that, but we were rolling into recession right then, towards the end. And the Federal Reserve was already dropping interest rates, and then the pandemic hit, and then everything got blamed on the pandemic. So when the Fed dropped it down to 0, it still was not enough to stimulate the economy. And that's when the Fed said, okay, we are going to go into what do they call it? It was because of the pandemic. They had unusual and exigent circumstances. That was the term that they used to provide new facilities, lending facilities, and tools that they typically would not have. And this is something that really takes, I think, this is probably more surprising to a lot of economists than the Fed getting caught off guard, right? Because everybody anticipates the Fed is going to be making a mistake, much like the great financial crisis, when they said that there was no housing market crash coming, right? Because this is what they said. But if you remember right, it wasn't exactly the wording that they used, that there was none. What they said is that there was nothing within their data that suggested that to happen, because their data sucked, right? So they did make a mistake in that fashion, which they didn't have the data that says, hey man, we got this housing market crash coming in the subprime mortgages. And a lot of that was due to the fact that there wasn't a lot of oversight going on within the shadow lending system. Like a lot of people don't realize that a lot of mortgages are generated outside of the big banks and then get pulled into mortgage-backed securities. So that's really what a lot of the Federal Reserve was saying at the time, is that their data didn't show that because they didn't have data that would show it. And so now they do, and that's a little different. So anyway, moving back up to today's current situation as far as the neutral interest rate. I kind of lost my place on where we were going with this. But the neutral interest rate and how to adjust that up, right? Like, how do you get the neutral interest rate to elevate so that you can get your ammo back, right? Because every time you start raising your Fed funds rate above the neutral interest rate, you start hammering the consumer, right? You're like saying, hey, you don't get the hell out of here. We're not going to lend you. You're the ability for you to have access to credit so that you can go out and spend it is going to be very restrictive, right? That's what they say when they bring it above the neutral interest rate. And that's where we are today. But they're trying to push it even further, right? They would love to get that Fed funds rate up well above 5% so that they could have their ammo back, which essentially they do. But they also have to have the neutral interest rate also elevated, right, above it, so that when they do drop the Fed funds rate, it would actually stimulate the economy because it would be well below the neutral interest rate. Did I get all that right? Man. Okay. So understanding all that is really like, I mean, that's difficult, right? I mean, there's a lot of stuff that's happening within that, but that's really to try and understand is that there is an interest rate that is neither restricting nor accommodating the economy, right? And the Fed funds rate is a target rate in which that the big banks have an overnight lending to each other that is adjusted on an overnight basis, right? That's how that whole system kind of ends up operating. So anyway, what does this do for our situation we're in right now? Well, the Fed is trying to push those neutral interest rates up. Now, how do you get the neutral interest rate to elevate? If it was at zero on a global scale, 0 to 1.5%, and here in the United States, say it was somewhere around, 2%, how do you get that neutral interest rate to go up? Well, you ultimately have to have the inflation expectation to elevate, because when you have inflation expectation elevated, then the inflation expectation is a self-fulfilling prophecy. You are going to start demanding higher returns for your capital investments. And that's essentially what we're starting to see now happening within the US Treasuries. Now, you can talk about like balance sheet roll off and all that other stuff that goes along with it, which is very true. And all those things have a lot to contribute to it, especially the government spending and stuff like that. But really what it comes down to is what the investor, what the market is willing to pay out, right? Or willing to accept for a yield on their capital investment. And the harder that they, or the worse that they feel that inflation is going to be, the more of a demand that they're going to ask of a return on those yields, right? So the higher you demand those yields, the more that the neutral interest rate will begin to elevate itself, right? As the return on capital investment is starting to find itself at a higher yield. And this is really where the market is demanding yields to be, right? Is that if you were to think about it, like, the further that the Fed steps away from participating, they're unwinding their balance sheet right now. I left a link down in the description. This is like the first time since like the Great Depression that they were able to actually unwind M2 money supply. And I was still kind of curious on like how much or how effective, and it did kind of come back there after the bank collapses started to take place. But I have a feeling that this M2 money supply is going to continue to drop going into the future. And this is going to start creating a liquidity crisis here in the United States and across the world. And that's, again, where I think about that question that was raised to Jerome Powell. It was like, how much demand or how much money are you going to print? And he replied with, it depends on how much demand for our liabilities there are. And that question right there, that question in reply really, like, it got me thinking. It was like, what is going to happen here going into the future when you think about like Jerome Powell looking out at the world, right? And I say Jerome Powell, but it's not Jerome Powell, it's the FOMC, right? But everybody wants to, like, blame Jerome Powell, so why not? Okay. So anyway, the FOMC looking out there at the world, right, and saying, okay, how much demand for our liabilities truly exists out there? And when you really think about it, like, there is foreign entities like China themselves have written debts in dollars, right? The Chinese government borrowed money in US dollars and it's due back in US dollars. These are offshore dollar bonds, right? And now you think about it, China and all kinds of nations and corporations and people all over the world have written out dollars or debts in dollars, right? This is the demand for the Fed's liabilities. The Fed's liabilities are dollars, right? So their assets are the US Treasuries, mortgage-backed securities, gold, SDRs, whatever it is that they have on their balance sheet, and the liabilities is all the money that they put out there, all the dollars and reserves and whatnot. So when you think about it, it was just like that question must be scary as hell to the Federal Reserve, because I wonder if all those debts were to come due almost instantaneously, if the Federal Reserve could even print at a pace that's fast enough to supply enough money to pay off all those debts, right? I very doubt that that could happen. And that's one of the, again, what I think about the de-dollarization push. It was just like, I think, man, this information, this de-dollarization is a story that is being pushed. It is a narrative, right? That is being pushed out there. I've never seen the only in propaganda do you really ever see people who would typically not be talking about a particular topic talking about it, unless it is propaganda. They want people to know this information, right? And they want to know it in a particular fashion. In de-dollarization, I mean, okay, boy, I'm really babbling here. I should lay off the coffee. Okay. Imagine it like this, right? You got supply and demand. We all understand supply and demand issues, right? You got a supply of money, right? And everybody thinks it's overabundance of money, which, when you got inflation, that's, typically why, right? You got this overabundance of money, but it's not the case, right? You got a demand for money way up here, right? The demand that was written, all these debts, right? All these offshore dollar bonds and stuff like that. You got this huge demand. You got a supply of dollars here. How do you fill that gap? Like, how do you bring this into line? You either have to bring in more supply of dollars, which they did. They pumped in, trillions and trillions and trillions and trillions, right? And it's still not enough to pay off all the debts that have been written in dollars, right? How do you close this gap? You can either print up a bunch of money or start screaming, get the hell out of the dollar, yo. De-dollarization, and bring these two things in alignment again. And at least that's what I'm seeing coming from it. Because when I have again, people who know me personally know that I study the economy a lot. And so when they come to me and they're like, dude, tell me about all this de-dollarization that's taken place. And I'm like, how do you even know about this? Like, what is it that's going on out there in the news or in the media and everything that is now informing you that you need to be paying attention to this de-dollarization? It's much like COVID and vaccinations and stuff like that. It was a media push to give everybody's attention to it. And if you didn't watch the media, you weren't concerned about it. I mean, anyway, let's read some comments. Let's go on to that. 200 of you up in here. Hey, go hit the like button, guys, please. We will find more people coming into the chat, and it will make this comment section a whole lot more fun. All right. Let's see here. Let's go up to the very first comments there. GM Ted, hi from Moscow. Well, hello. Hi, Simon. And the Fed, absolutely, and the Fed. All right. Hi, Jiro. Was watching about Russian economy. Seems like you are doing. Dice on the 8. Yeah, we got 8 here. Europe is dying. Yeah, Europe is still getting some major inflation coming through, where the U.S. is starting to see it. A lot of it start to ease up. A lot of the inflation pressures, and I mean, I see it personally working retail, right? But it's hard to say, here's the evidence, here's the charts, here's all the stuff that points to these deflationary scenarios, but I'm seeing them happening, right? I mean, I see it in siding, see it in paint, I see it in, the other day I priced out a door, right? It was a really expensive door, and man, I don't know if I should be talking about this. Yeah, anyway, there was a slight issue with the door, and now I need to price out this door again, but just slightly different, right? And I'm like, no, if we do this door differently, it's going to be more expensive, right? So I reprice out the door and find that the price of these doors have actually come down a little bit. Now, it was a really expensive door, and the amount that it came down was almost insignificant, but the fact that it did actually come down on price when I thought this particular style and with the changes they wanted to would actually increase the price of the door, it didn't. It dropped it down and made it less. So I know that's kind of confusing of what I was just saying, but I don't want to get into too much detail on that because it's still an open thing that's taking place. But ultimately, there's, the prices of a lot of building materials, not just lumber, but other things are starting to find some price pressures coming off. With that being said, it's still not like making up for the fact that it has moved up so dramatically. So like, if it was $100 item that moved up to $180 and now it's 165, is that really like, you know, how much relief is that? I mean, because, of how much it moved. Just saying that's kind of like the dramatic moves that a lot of this stuff is made. I mean, I saw it in cedar shingles. We were selling a bundle of #1 red cedar shingles for $199. Right now we have them at 175. Or no, I'm sorry, 149. So it's like $50 have come off of a bundle of shingles. But when I used to sell them for like $80, it's like selling them for 150. It still seems like ridiculously high. Yeah. All right. Yep, it's quite. Where's my? Here we go. Let me make this easier. There we go. Okay. Yep, it's quite fine here. No issues so far. In Russia, I can imagine. What do you think of the end of the affirmative action? To be honest with you, I don't look at a lot of social things like that. I do look at it, I do think about it and stuff, but as far as me giving up my opinion on that, I don't look at that as far as an economic thing that is happening there. Now, other people might, I don't, okay? I don't look at like the Roe versus Wade, that is like a very like hot topic for a lot of people to just go and flip out on. I'm not into it, right? I'm not into that part of it. Now, if you want to ask me like the economic impacts from something like this, then we can talk about like how this is going to start affecting future generations and the possibilities from it. But until we actually see the movement and what people and how they react to this and what differences that it makes, I mean, it's hard to say, right? Because we live in a different time. So those type of social things, although they do have a good impact into the economy, I don't really look at them too deeply, because you end up getting into like political debates or whatever over it, as opposed to just looking at it simply subjectively from an economics point of view, which is really takes more time and understanding of the changes that are going to be made from it and the people's behaviors from that. So anyway, I don't know. I hope that answers the question. I didn't mean to dance around it too much, but I just don't really get into politics or, social things like that too much. I mean, we talk about homeless, but that's more of an economics thing that is happening. Dishes Every Day. Go and check out Dishes Every Day. That's my wife's channel. She has this ASMR thing going. She started off just doing dishes, but she's now moved it into like doing like chores around the house and vacuuming and folding laundries and weeding and just like typical daily things that she does around the house, and she's getting quite a bit of attention from it. She's got up to 97 subscribers, which a good chunk of those have come in just the last few weeks since she started changing the channel around a little bit. So yeah, go check it out. Go show Sarah some love, and I appreciate it. Okay. Moscow is full of new buildings, luxury cars, restaurants full. Okay. I mean, if that's what you're saying, I mean, I'm reading articles about how the ruble is like basically ineffective right now, how Russia is sitting on like an insane amount of like rupees and stuff that they can't do anything with. All this whole BRICS and de-dollarization and moving away from the dollar hasn't worked out very well for any of these nations. Now, I am not one to doubt it. It is definitely happening out there. But if you want to go ahead and just get out of the dollar now, I mean, I think you're going to be missing out on a lot of opportunity. And I think that opportunity is coming here as people are not anticipating that there is going to be a huge liquidity issue, considering that the M2 money supply has dropped, and I have a feeling will continue to drop into the future, as the Federal Reserve really wants to see how much demand for their liabilities really exists out there. And I think when they find it, it's going to be like very painful experience for a lot of people. It's like, all of a sudden they're going to realize that they're way out, like there is far more demand for their liabilities than they realize, or that anybody realizes out there. And when they realize that there's not enough liquidity to cover all that stuff, it's going to get very scary for a lot of people. Let's see here. Let's talk. What else we got? I see some super chats coming in. I'll go find those guys. All right. The dollar is dead. It just don't know it yet. Well, all fiat currency is a dead man walking from the very beginning. Like you can't create a fiat currency with saying, okay, this is going to last forever. Everybody knows that it has a life cycle to it, but how long is that? Like how far can you stretch it out? That's the real question that comes behind it, because everybody says that the dollar is dead, but yet all I see out there is people investing in dollars. They have their pensions in dollars, they have debts that are due in dollars. Nations around the world are taking IMF loans in dollars. Like the dollar isn't going anywhere, right? I mean, even I was reading an article talking about how the dollar, like current world reserve currency status, somewhere about like 58% dominance. I don't know if that was accurate, but the amount that they were anticipating it dropping in 10 years was like going down to like 54%. Like over the course of the 10 years, it's going to go from 58% of dominance down to 54% of dominance. And they're talking about how everybody's getting out of the dollar. Yeah, that's true. It's that direction, right? That's the concern, is that it's moving in that way. But what's going to take place in that time? If there's a liquidity issue and people are like, man, I am done with the dollar. I want out. I want out of this thing. And I'm going to get out of all my debts, and I'm not going to take out any more in dollars, and I'm not going to invest in dollars, right? The moment that that starts to happen, the demand for dollars is going to skyrocket, right? As people are all going to try and scramble for the same thing to get out. And I mean, what I see taking place from that is more of a increase in the strength of the dollar as people are trying to get out of it, creating that you know that absolute opposite effect of what everybody is anticipating. Okay, let's see here. Hello from South Africa. Right on. It's nice to see you. I'm still waiting for this pivot. It's coming sometime. Well, isn't the pivot isn't going to happen for a while, for a long while, right? The pivot where they stop raising rates and start lowering them again, that's I wouldn't be surprised if we see the interest rates elevated for like a year and a half, 2 years, something like that. A lot of people are shaking their heads saying, no way, it ain't going to happen. But they kept interest rate extra low, extra long for an extended period of time on purpose, right? They increased the asset prices to astronomically high, like house prices, stock prices, all this stuff, way elevated it. So when they raise the interest rate and this stuff starts to come down, it's going to come back down to the mean or the average or whatever it is that they're shooting for. And hopefully it doesn't undershoot too much. I mean, I think they're going to undershoot it. Like at some point, it's just like you can't go that far over without like having a correction that's going to fix it. But ultimately, when they have the interest rates too low for too long for that significant amount of time, it was done on purpose to increase the asset prices to keep them elevated. So when they do raise the interest rates, the pain of it is going to be like, oh man, look how much awesomeness we lost, and now it's just coming down to awesome. I mean, I experienced this with my own purchase of my own real estate. Gee whiz, I got to slow down. Okay. I experienced this myself with the real estate that I had purchased, where the house was very expensive, right? I mean, I live in one of the most expensive areas in the entire state of Oregon. Right? In fact, not too far from here, Cannon Beach, I think, was the number one place for increasing prices over the last year. It was something like, I don't know, some ungodly amount, 70% or something like that, that it went up in the course of like 2 years or something. I don't know if that's the exact number, but it was really high. So like houses practically doubled over the course of just a few years in Cannon Beach. And here, my own personal place, like it went up, I don't know, let me guess here to see if it was that, then it went up something like close to 30% inside of a year and a half. All right. And the amount that it has dropped, like if I had purchased it at the peak of the Zillow estimate, the amount that it has dropped now would be heartbreaking. I mean, absolutely heartbreaking. It was an insane amount that has come out. I'm still like about 15% higher than what I had paid for it. And I don't know, about 25% of it is equity. I mean, it's just like, I don't even know how this happened. This is not what I was anticipating taking place when I bought the house. I was scared. I thought for sure the interest rates was going to crash the housing market, all that other stuff. I mean, I was right there on board with everybody else when they said it, because I thought for sure once they ended the moratorium, that's what really scared me the most, was the moratorium thing. And thinking that there was going to be a crash in the housing market, is that everybody was going to end up going into foreclosure, as they were not going to be able to come up with the back payments, or maybe not be able to refinance or something because the interest rates are up. That's what I thought was going to start taking the housing market down. It didn't happen. Right now, is it going to happen? Is it still in the hopper? Is it still going to come? A lot of people are saying that's the case, right? But even myself, if I was sitting in a spot in which that I couldn't make my payments anymore, I could sell my house. I could put it on the market and start dropping the prices significantly if I wanted to, or at least accept a lower offer and still be able to come out ahead, right? Or at least not, not lose money on it, or, end up like, short selling or something like that. Like, I'm not even remotely close to that kind of position on the house. Anyway, moving on. Okay, back with the glasses. Okay. Interest rates is still better than 80s or 90s, yeah. It's an instrument of the elite Rothschilds. Yeah. Rockefellers, yeah, all them people. Okay, who are the private shareholders of the Fed? Do they have influence over the Fed? Isn't it the big banks and all the people who own those? All right. He is a cop. Cop? Who's a cop? If you're talking about me, there was a time that I really did want to do law enforcement in my life. I really did. Like, I mean, when I was probably, I don't know, 13, 14, 15 years old, like, I thought that was going to be like what I was going to do. And then I started drinking and smoking weed. Absolutely, my man. Okay. Oh my God, let's see here. Is there any, let's see. Yuan being the main currency will lose reserve status. We will lose. No, we won't. You know why? It's because this is the why. And you're starting to see it taking place right now. And it's the problem with the way that money enters the system. Okay, when you're China, you are a manufacturing state. You are absolutely getting your money in through the selling of your products. Like, that is how it happens. When you do this, okay, and your base is all manufacturing, if you have a global slowdown, your manufacturing slows down, right? And you can't export, that's the new money coming in, right? And so what you end up having to do is you have to issue out debt to make up for the lack of new money coming in. All right? And now if you have this debt issuance going out, that's a problem, especially if you're not manufacturing, as people are looking at you going, how are you going to make your debt payment? All right? I mean, that's the major concern coming from people who are getting their new money in from manufacturing. So now when you are China, right, and you have to issue out debt in order to get the new money to come in, you have to convince everybody around the world that, hey, I promise that I'm going to pay. Now, when it comes to the United States, they don't have any problem doing that because their new money comes in from more debt issuance. That's how they get the new money in. And everybody knows it. And everybody is okay with it. And they have always have been. And if they're not okay with it, they have to be, because nobody else is going to accept anything other than dollars. All right. So now back over to China. Right? Now they have to start issuing out debt to make up for the fact that they are not exporting out a bunch of their manufactured stuff. Okay. How do you get the yuan out to the rest of the world? Right? So you're going to sell your debt and you're going to take on yuan to make up for the fact that they're not manufacturing much. And then what are you going to do? Right? You have to do currency swaps or something else like that, or you start buying the manufacturing of other nations and you start exporting your yuan, right? Because that's what the United States had to do. How do you get that money out there? It's not like, you see, when people start saying, okay, man, I want to start buying my stuff. I'm going to start doing trade. Okay, I'm a foreign nation. China's over there. I want to start doing trade with China. Screw the dollar, F the dollar, right? I'm not dealing with the dollar. I want some Chinese yuan. I'm going to go out there and start taking my currency. I'm going to start buying yuan, and yuan starts to strengthen, right? And you realize, oh man, I can't buy as much stuff, right? Because I just bought up all this yuan like all the rest of my neighbors and everybody else did, and now the yuan is strengthened. And now when I go to buy my stuff from China, I can't buy as much. Well, that doesn't work out too well, does it? All right? So China needs to issue out more dollars, more yuan. Right? How do you do that? You go deeper into debt and start buying more of the products of these other nations to get the dollar, to get the yuan out there. So now that's how China's going to end up having to do it. And it's not going to work out too well for them because the United States is doing that. So now you got two competing currencies that are trying to be the issuer of debt, to be the supplier of currency. You see how this is going? This is the currency wars that are going to take place. So it's not going to work out in any sense unless they end their manufacturing, export their manufacturing out to the world, start issuing out a lot of debt, build up a huge military, knock the United States off its horse, and start doing the protection of the shipping channels and being a huge importer of foreign production. That's how China would have to do it. That's how it would go down. Because anything else would fail. Like it can't go down any other way. Even if they tried to go back over to a gold standard, it was just like, hey, let's do a gold standard. Well, the United States would immediately fail, right? Because we don't produce anything, so we wouldn't have any money. We would export all our gold almost immediately, trying to, buy the production of foreigners. So we would fail almost immediately from it. The most industrious nation would then take on all the gold, and everybody else would then have to suffer in poverty, right? As the concentration of wealth would just go to the most industrious people. And that cycle would fall apart, and then redistribution of wealth, and it would all happen over again. Same thing would happen with Bitcoin. Like, you can't do Bitcoin, you can't do anything that has like a fixed amount to it, because anything with a fixed amount to it is going to eventually find its way into a single pocket, and then it will have to be redistributed out again. And all that stuff is very painful and doesn't work out very well. That's the whole idea behind the Federal Reserve. I'm not saying it was a good idea. I'm not saying that it's like one that we should continue on with. I'm totally down with ending the Fed and going back to a gold standard and trying all that other stuff. But most people are not ready to face something like that. It's going to be too much for them. So that was the whole idea behind the Federal Reserve, was to be able to provide more currency, to basically have an elastic money supply that you can just basically provide as much currency as you needed to the consumer so that they can continue right on consuming. And once the United States was a consumer and not a producer of anything, we had to be a consumer in order to distribute the dollars out to the rest of the world. Where's those super chats at? I should go find those. There's my glasses. All right. You guys having fun? There they are. All right. PJ, thank you very much for the $5. De-dollarization actually means BTC adoption, but nothing else has any other chance of replacing the U.S. bond market. That's right. And even, we just kind of discussed it, but I just don't see how don't get me wrong, I am up to almost a half a Bitcoin. I am like half a Bitcoin worth of Bitcoin, I guess, because I've been buying it like $50 at a time for a very long time. But I'm up to almost a half a Bitcoin, and my goal is to have one, right? To be up to one whole Bitcoin worth. And I don't know what I'm going to do with it once I have it. But that was just somehow a goal of mine, was to acquire that. I could see very much how Bitcoin will be used in the future amongst the people themselves. I could see where it could be used for major purchases between nations or corporations and stuff like that. As a actual reserve currency, again, I think it would do the exact same thing that gold would do, and that would start concentrating into the hands of a few, whoever could export the most, production to the world. The world would end up sending all their Bitcoin to that one particular nation, and then they would have all the Bitcoin, right? And again, it would be the same thing whether it was gold or not. It's a fixed amount. And hey, that's cool. I'm okay with that, because I'm prepared and ready to deal with that sort of system. But nobody else is. Everybody, you guys are, but the regular sheeple people aren't. All right. Hey, John, thank you very much for the $1.99. We need 10% rates. Wouldn't that be awesome to see 10%? I mean, can you imagine like the return on your investment? Like even just your savings account, just a simple savings account, having a decent amount of like return, annual return to it. People would actually enjoy, saving again. All right. Hey, thank you so much, Isaac, for the membership to the channel. Those of you who have joined the channel, I really appreciate that support. I really do, because I have not been a really good host to just the members of the channel. I said that I was going to post videos just for you guys, and I do like one every couple of months or something like that. I'll do more. I mean, I realize that, being a member of the channel is really your way of supporting the channel, a way of, being able to help, the family out. And although I've done some things recently to try and push the money here on the channel, I'm not going to do that. Like, I'm not going to do that anymore. I'm going to really just do the videos and stuff like this with like the membership. I might try to do some writing or something like that and do Patreon again. But as far as like pushing for money, I'm not going to do it anymore. I have a reason for it. I had a particular goal thing that I had going on, so I've kind of put myself in that position on it. And from here on, I'm just going to do the classic uneducated economist stuff, All right. Inspirational Nomad, thank you so much for the $2. Just gave Dishes Every Day a sub up to 100. There it is. So I told her if she got to 100 subs, I'd be giving her shout outs and stuff like that, because she's really like, she's really excited about the channel and the attention that it's getting. So thank you very much, Inspirational Nomad. That's really cool. All right, James Nelson. Gold and silver will be adopted as well, but BTC can replace the SWIFT system. Gold and silver cannot. I mean, yes, it can replace the communications, right? Like, I have very little doubt in my mind that it is an awesome communicator, right? As far as like being able to transfer funds from one location to another, I am so down for that. That is like a beautiful thing that can happen, especially if you can't get government to stop you from doing it. That's like probably one of the coolest things that I think about Bitcoin, is that, once you have entered that transaction into motion, it's on its way, man. There is nothing that anybody can do to stop that. So in that sense, I do. But, understanding the flow of money and the concentration of wealth to the most industrious nations, and then once the dive into luxury starts to happen, you start having boom and bust cycles, business cycles that I don't believe people are really prepared for. And, I mean, it's what's worse, debt cycles or business cycles. I don't know. But I mean, understanding either one of them doesn't really put me in a fear of either one. I just, know that you have to prepare for those type of things. And that's where I just don't feel like, if you have a fiat currency, at least you can dupe the people, right? And I mean, that's kind of gross to think about. But when people don't have any way of really understanding the economics on a level that can protect themselves, then you almost have to dupe them, right? And I mean, that's what sucks about it. And like, the more you understand the system, the less you want to be duped. And that's where like things like Bitcoin and gold and, just diversifying into things that are outside of the government control makes you feel better about it, because that's what they're doing to the people, is they're duping them, and it's almost for their own good, because they just, the whole thing wouldn't work. It would like, it would basically implode on itself. But if you can like basically teach the people enough that they can pay bills and taxes and stuff like that and nothing more, then you can keep that thing going for a long time. And apparently they have. I don't mean like sound that way, but that's really the way it is. Isaac at War, thank you so much for the $2. Will student loan repayments affect the economy? I mean, a lot of people have asked me about that one, and I would imagine yes, it's going to affect the economy, but in what way, really? Like, I mean, I have to think, like, what is it that the people are going to do? Again, like, are they going to start paying these student loans? What happens if they don't? Do they start getting garnished? Is there any way of like, getting out of it? Is there going to be any kind of relief in that that's that sense? Like, will government come in and provide something somehow, some way? It's hard to say what it's going to do to the economy without actually, seeing what it is that's taking place. I mean, I I honestly think that people are probably going to end up having to start making those payments. They're going to find that the luxury items that they were enjoying, or the luxurious life, if they even had one, is going to be very limited. Um, at the same time, they push these student loans to be repaid. I have a feeling that the hardest push is going to be taking place at the same time we start seeing deflationary pressures. So as like the prices of stuff starts to come down, the demand for that payment, that repayment will start to increase. Kind of like, just taking that deflationary money back. I don't know. Like it's hard to say. I mean, I'm just thinking out loud on that. I don't know. But I knew that they weren't going away. I mean, I knew that those debts weren't going to go away. You can't split gold, silver small enough to cover the fractional derivative speculation market. BTC is way too slow to replace SWIFTs, plus it's captured. There's enough titanium to tokenize, though. I disagree. I think there's enough gold and silver, especially if you tokenize it and take it onto into like a cryptocurrency type of thing, then you could break it down to like, tiniest little fraction. So no, I think you can use gold and silver and break it down fractionally through crypto tokenization kind of thing. But then you're left up to a third party claim, and I don't think that it would work. Like as far as a viable currency, to be everlasting. I mean, I think it will still create the booms and bust cycles that I'm talking about when you have a fixed amount of currency. And again, if you want to do that, I'm cool with it. I'm totally down, right? You are such a baller. You have multiple vehicles. Dude, I do. I got this 99 Toyota Corolla, which is like awesome. I got the battery replaced and registered again. So we're up and running on the 99 Toyota Corolla. I got an S10, a 2001 S10. My parents are talking about giving up their 99 Explorer, which is like in really nice condition, and so like I might end up with that thing. Another buddy of mine has an S10, another S10 that's in pretty decent shape. It's about the same year as this one. It's got 85,000 miles on it. He asked for $1,600 for it, so I might pick that one up too. So I'm going to collect all these old vehicles that are still running, that are still in decent shape, and I'm going to hold on to them and just use them up, because buying vehicles is a complete waste of money. I would much rather be investing or saving or buying cryptos or figuring out what it is that I'm going to do for a speaking event. Oh, here's something. Not too far from where I live, out in the country, there's a place called the Wiki Up Grange, right? And it's a big building. It'll seat about 150 people, if I remember right. And to rent it for a night is super cheap. And I was thinking it would be fun to do like a speaking engagement out in the middle of nowhere. Wouldn't that be fun? All right. I don't know if that'll work out. How anyone could buy a house in these markets. It took everything I had a year and a half ago, and it tore me up. It was tough. All right. If there was World War III, the debt in dollars doesn't have to be paid. We have houses, shortage, and incredibly high interest rates. Good luck. Yeah. In Los Angeles, people are paying asking price for homes in certain areas. I've purchased 3 houses this year. Good for you. Cash flow, John Ramirez. Hit the like button, folks. Yeah, thank you. Bow-tied big cat. All right. Would it have been better if they instantly jumped the interest rates to 6% back when they started to raise rates similar to the 80s? Oh, no. No, it wouldn't have. But you know what's kind of interesting by saying that, by bringing that up, is that mortgage rates did. almost instantly shoot up, and then they leveled off for the most part. Like they go up, like they've been going up and down, but like they don't stay exactly stagnant. But for the most part, they shot up to like what, 7 or 8%. I forget exactly how high they had gone back in October, and they fell down to what, 6 or so, and they kind of just hover around 7. I mean, I'm not exactly sure. Like I look here in Oregon, for some reason, like Oregon's interest rates seem to be higher than anywhere else. But those moved up right away. Like the Fed made this statement, and then like, hey, we're going to raise rates, and then like the mortgage rate shot up right as the same time that they were unwinding the balance sheet, as they started doing balance sheet runoff. So the mortgage-backed security market, like they immediately, boom, here, this is where we want to be. And those rates have pretty much stalled. Like that's where they're at. And even if the Federal Reserve raises or lowers rates from here, or just, I mean, if they lowered rates, I can imagine that would have some kind of impact on it. But really, it comes to that balance sheet unwinding that I think has caused the interest rates to be on the mortgages to be where they are today. And it's something that we had talked about before, because like, the idea is that when the Federal Reserve, okay, if you don't understand the mortgage-backed securities in the Federal Reserve, we should go over that real quick. So the Federal Reserve during quantitative easing was buying something called mortgage-backed securities. Mortgage-backed securities are like a bond that are backed by mortgages. So everybody has these mortgages. They pool those things together, put them in a box, and sell them off to an investor. That investment is called a mortgage-backed security. The Federal Reserve was buying an intense amount of these things, right, and putting it on their balance sheet. As they were doing this, it lowered the interest rates on these mortgages because the prices of these mortgage-backed securities went through the roof, as the Federal Reserve is a buyer of them. So as the Federal Reserve was buying these things, dropping the yields on the mortgage-backed securities, causing the prices to go up, the demand for mortgages right then really started to kick into gear as people were refinancing and buying whatever house they could. So the refinancing, when these mortgage-backed securities were being pushed, the yields were being pushed down and the prices were up by the Federal Reserve doing this balance sheet purchasing, putting them on their balance sheet, they had artificially suppressed the yields on the mortgages, right? So people were able to refinance. This is where like the great refinancing took place. That refinancing produces more mortgage-backed securities. So as they refinance it, basically takes out the old loan and reestablishes a new one. A new mortgage-backed security gets built that the Federal Reserve can buy. Right? So as this has taken place, there's more and more mortgage-backed securities being purchased that the Federal Reserve is like basically gobbling up. Well, then it goes into the reverse of that. Now the Federal Reserve is going to unwind these things and let these things like either outright sell them or just allow them to mature, right? So they're going to allow a certain percentage of them to come off their balance sheet. Now, when people heard this, they thought, okay, when the Federal Reserve is no longer there to be a purchaser of these mortgage-backed securities, the demand for these things is basically going to disappear, as they were the biggest buyer of these things, right? So that whole idea was going to say there's going to be a flood of mortgage-backed securities that are out there. The prices of them are going to plummet and the yields of them are going to rise. And that's essentially what ended up happening. But it only reached a certain point, right? So as the price of these mortgage-backed securities started to fall and the yields started to rise, it got right away to a point where the the market said, that's it, that's my spot. That's where I'll buy in because the yield is enough for me. Right? And that's what we saw take place. And that's how the Federal Reserve was able to continue to raise rates and not necessarily affect the mortgage market, right? The interest rates on the mortgages, because the market found it right away. It was just like, oh no, boom, here we are, right? And then that's where, the market was willing to buy into it. So this is how the Federal Reserve was able to unwind a lot of their balance sheet without actually, causing an ever increasing amounts of interest rate hikes going on in the mortgage market, because it basically got hit with a shock and awe event right at the very beginning, and then the market got used to it. At least that's what I saw from it. Okay, if you can take a 5-year swing buying houses, it's always a great investment. Okay. Dollar for dollar, all currencies equal. I don't know. I mean, are they equal? They're all equally worth like the amount of, debt repayment you expect to get from that particular sovereign nation. But I guess I agree that they're all worth zero. It's just a promise to pay. That assessment, that is not what I'm talking about. Oh, I guess you guys are talking there. Okay, debt is old as money. Yeah. When you have 25-30% down payment and buy a house in a neighborhood you want to die in, it's never a bad time to buy a house. Take out a 15-year loan. Even better, not care if the market goes. Yeah, I mean, I don't know how many people could afford a 15-year loan. I mean, that's pretty that's pretty high payments. I mean, all right. Dollar is a unit of measure. Federal Reserve notes aren't money. Congress needs to order Treasury to print debt-free notes and restrict their circulation to U.S. citizens. Foreign nationals can use the Federal Reserve notes. Whatever do the dollar cost average, whatever you do, dollar cost average into Roth IRA. Yeah, I can agree with that, Kirk. Especially if you're, the younger you are. That's the one thing that I don't really think about a whole lot is compounding interest as far as like investments. Like I look at things that are going to go up in value, something that, like whether it be stocks or, going into Bitcoin or, the house or something like those are the type of things. But really, if you are young, look at compounding interest. Compounding interest is by far the easiest way for you to make it rich. I mean, you can I don't know, speak with financial advisors, get with the money guy, whatever, but find a good account or a good financial advisor that you could put something like into a Roth IRA and do it forever. Like if you're in your 20s, you do it till your 60s, you put like, even $50, $100 a month away at something like, even 6 or 7% interest. I mean, it's amazing on how much money you'll have at the end of that. It's just like put it into a compounding interest calculator. Just check it out. Like being young is probably the advantage that you could ever have for accumulating wealth because of that compounding interest that you have that you can take advantage of. When you're 46 years old, you don't have the time. I mean, you got some time, but by the time you actually get there, it's too late. You don't get to enjoy it. You want to enjoy it when you can still enjoy it, not have to do it to survive. What do you think of Canada dollar versus US dollar? In what sense? Like, I mean, like, is one going to grow stronger than the other or something like that? Like, what's the, I don't know. Let's see here. I know where I'm financially, and I am totally happy with it. Debt-free, retired, and owe nothing. Owe nothing, not own nothing. All right. Russia has lots of gold. So weird how he wound up ventilated shortly thereafter, isn't it? I bet U.S. has the most gold. I bet you're right. Please let us know what you think about Canada dollar versus U.S. dollar. Again, like I'm not sure, like in what sense. Like, do I think one's going to weaken to the other, or is one stronger than the other? Like, is one a better currency? Like, I'm not sure what the question really is asking me about. I mean, the monetary policy and like the stuff coming out of Canada. I'm not like necessarily somebody who is like really understanding of the Canadian monetary policies that are out there. I look towards the Federal Reserve and what their monetary policies are and their like actions to provide the world with the liability and how the United States Treasury is the issuer of safe and liquid assets. Like that's the kind of thing that I think about. I don't know how Canada can compete to something like that. It's like it's not even really a comparable item anymore, I just spent half of my Bitcoin. One Bitcoin is the goal. Yeah, that's what it is for me. I mean, I want to get a hold of just at least one, and I'm not sure like what I would do with it after that other than have it. BTC doesn't have to be the primary currency. It's like gold, it goes up in value versus the US dollar. You can spend your BTC to buy preloaded debit cards. But okay, but still in the end, unless it's priced, okay. So I was reading Wealth of Nations. Um, what was it, last night or night before? Night before. And Adam Smith is talking about in during like Roman times, he was talking about like the purchasing that was taking place and how gold and silver and copper were finding their value. And what was something interesting is that the value of silver was based on copper. It was how many copper pieces would it take to buy silver, right? Or how much, a piece of silver was worth in copper, because everything was priced in copper. So when you came to use silver and you wanted to make a purchase, the price of silver would fluctuate on the amount of copper that you could exchange for it. But the copper was the fixed price of all the goods and services that were taking place, right? And it wasn't until after the fall that the northern people came down and brought silver, and then silver was the fall of the Roman Empire, if I remember right, if I was reading this right. And then that's when the northern people came down and started introducing more of a silver to the system. But it was copper that everything was priced in, and silver would fluctuate to the amount of copper prices, or as far as what you could buy with it. Like you might come in at some point in time and find that you can't purchase as much, or you could purchase even more with your silver, but that the copper, it would be fixed all the time, right? It would always be a fixed amount. Did I say all that right? Anyway. Hey, PJ, thank you very much, PJ Cornell, for the $5. I disagree. That BTC or maybe gold won't replace the dollar because you're assuming that the BIS can actually even stop it if they want to. No, no, no. That is not. That is not even what I'm getting at, PJ. No, this doesn't have anything to do with governments. Not at all, right? I mean, it does in the sense that the government needs to be there in order to produce the dollars, the fiat currency. But what I'm talking about is the flow of money, all right? What ends up happening, it doesn't matter if what it is, so long as it's a fixed amount, you will always end up with this exact same scenario going down. First thing is going to happen is that the most industrious people out there are going to export all their not that they're going to export their stuff that they've manufactured. When they export their stuff, they're going to have to get a currency in, right? Now that currency, if it's gold, Bitcoin, dollars, whatever it is, that's what's coming into them, okay? Now, if it happens to be BTC and they are very industrious, right, and the Bitcoin starts coming into them, all they have to do is just hold on to the Bitcoin, and the ever-increasing amounts of Bitcoin is going to keep flowing into their nation. Now, the only way to get the Bitcoin back out there, because what's going to end up happening is that the rest of the world is going to start slowing down on their purchases because there's not enough currency to buy anything from them. So what they're going to end up having to do is start buying things from other nations out there. And that's them actually moving into luxuries. And so as they start moving into luxuries, they're going to start finding that they're going to export their manufacturing. Right? As their exporting of their manufacturing starts to leave, they're going to start having a separation between the rich and the poor. The separation will already start, but this is where it's really going to start to widen. As the exporting of manufacturing means that the good quality, high-paying jobs that would provide a standard of living are leaving. Right? Now, the people who have the BTC, or the people who have it left and who are buying the foreign products, they are the ones who are moving into luxuries, enjoying that new money, or enjoying the money that they have, right? But eventually, once that new money turns off, or they don't have it anymore, they will fall into poverty themselves. So the key to it, the whole thing, right, and it won't work, is that everybody has to be manufacturing balanced and trade, right? I mean, a balanced trade. That's like, it's not going to happen, okay? So you might get a moment of it. There might be like, you might be able to produce for just a blip in time, right? In a perfect scenario in which that, yes, everybody is manufacturing and buying equal amounts from everybody else. And there is like a perfect exchange value between everybody. That would quickly, immediately deteriorate into somebody doing better than the other, right? Some nations will fall, some will rise. The ones that rise will eventually take all the BTC, fall into luxuries, export all their BTC, and fall into poverty themselves. And this will be the cycle that starts to take place throughout many nations all over the world, so long as they continue to use BTC. Right? Same thing with gold, same thing with anything else. It isn't about the communications, right? The communication is a big deal. It makes it more efficient and makes, things happen, but it's not a matter of the communications of it. It's the concentration of wealth that takes place when you have a fixed currency like that. And there's really nothing you can do to stop it. So, you know, I won't, it just, that's the way it works, Let's see here. Let's move down. Did I get another one? There it is. Sorry, I'm trying to hit the super chats here. Thank you very much, that dude over there, O2, for the $3 Canadian. I very much appreciate it. All right. You can't peg minerals to crypto. Well, you can tokenize stuff. You have to rely on a third party, but it can happen. All right, central bank digital currencies will correct collapse of cryptos, especially Bitcoin. I don't know. The Lightning Network will make consumer speed faster, yes, but it's still totally outside the realm of being able to replace SWIFT or interbank transactions. SWIFT 44.8 million transactions a day, BTC 350,000 max. Yeah, and I agree. Like that's what's BTC is too slow. But things like the Lightning Network could make it better. But again, that's like, relying on third-party systems and all kinds of stuff that goes on to it. But all right, let's see here. If you like losing your spending power, then you can buy XRP. Laugh out loud. My finance is like, why is doing this from my feel is like, why are you doing this from his car? He looks like does Uber or something. He needs a new car. No, I'll get a new car, but it isn't going to be like a new car. It's going to be a different car, right? A super cheap car that I don't stress or worry about, and gives me the transportation needs that transportation wants that I need, right? Or whatever it comes from it. I am not somebody like, there's going to be a day where I will be driving a beautiful new badass car. But it ain't gonna be this. It ain't gonna be today or tomorrow, right? I mean, I got other things that I need to do that don't involve driving a new car. I mean, I don't even know why I would want a new car other than to look cool, right? So, yeah, someday when I want to be cool, I'll get one. Until then, I'm gonna have to not be cool. Explorer, yeah, Exploder, yeah. I had one that got rear-ended. Remember that? I used to do my videos from a Ford Explorer, but it got bashed, got rear-ended out in front of my house. All right, I love buying cars. Resto mod purchase 2016 Ford. Yeah, well, that's okay, Mike. Totally cool. I am not trying to knock somebody's hobby. Like my buddy, the guy who I want to buy the S10 from, that's what he does. He buys cars. He has a bunch of them. He buys them, cleans them all up, fixes what's broken on them, makes them like good again, and then sells them off or trades them or does whatever. I mean, that's his hobby. That's what he does. I'm not knocking it for a hobby. If you have a hobby in cars or it, then go for it, man. Dump your money into your cars. I don't have a hobby in cars. I not even interested in having a hobby in cars. So my 95 Ranger did burn a good bit. Yeah, my 95 Ranger lasted me over 300,000 miles. All right, the Fed has only paused and then continued to hike once in their history. Yeah, I think they're going to do it. I think they're going to continue to raise rates. And, really, again, I think it's all more about getting the neutral rate up. Like the inflation expectation, I think is now, I mean, everybody is still like very adamant about like, the inflation is not coming down. We got hyperinflation coming, whatever. But really, you're starting to see the articles. You can't really find commodities or anything else out there that are reaching their all-time highs right now. The inflation pressure has definitely started to, it's definitely presenting itself, and I can see it in all kinds of things. But as far as like, the as far as like the Federal Reserve continuing to raise rates. I mean, the interest rate after this, as far as like whether or not they raise it or keep it still, is going to be more about a credible threat to continue. Like if the market is not behaving in a way, or no, I shouldn't say the market, if the economy is not behaving in a way that they feel is appropriate from their stance, then it's a credible threat at this point, right? They're going to be like, okay, well, we'll raise it up another quarter point, and everybody's going to be like freaking out about that. But really, that quarter point interest rate hike won't take effect for another 6 months, you know. And so like, but the immediately impact on the market will start to take place. So that's really what I think like any kind of interest rate adjustment will be for, is for, you know, manipulation purposes, as far as continuing to keep the credible threat going. I need something to use. Sun shield on my phone there. What's this? These people out here behind me think I'm nuts because I'm sitting in here talking in my car to nobody. But I'm not talking to nobody. I'm talking to 181 of you with 123 likes going on. All right, PJ, back with the $2. Yes, BTC will wreck the world, but it's happening. Yeah, wreck or change. I mean, I think that's more about the meaning that you give it. I don't know about wreck the world. All right. PJ, another $2. Thank you so much. I told her your car streams was your shtick. Yeah, thank you. It is, you know, really, I started doing them in the car just for the sound quality of it, because you know, really recording in your car is like one of the best places for sound quality. Anywhere else you go, you get a lot of, you know, echo, or it just sounds like that chamber effect kind of thing going on. So doing them in your car is just really the best place for sound. And it was quiet. Like I didn't have to worry about like, you know, the kids or the dog or anything else running through. It was just a quiet place to do them. And then it stuck, you know, after I got the Toyota and got the blue dice, which were given to me by a fan who sent them to me in the mail. You know, it just kind of it just became my place. And now it was funny, like even like doing it with Peter Schiff, you know, doing the interview with Peter Schiff, you know, it was just like, he even asked me, he's like, dude, are you in your car? And I'm like, yeah, man, I do my videos from my car, man. And, you know, that's just like, I don't know, this seems like a good place to do it, you know. Never change the car, brother. It's your thing. Keep it as a set prop, if nothing else. Time for me to go. Nothing but love here, brother. Yeah, absolutely, PJ. Thank you so much. And thank you for the comments, man. It really does add to, you know, to strengthen, or, you know, maybe change the way it is that we are feeling and understand how, you know, the economy works. And, you know, having these discussions is definitely the way to go about it, you know, especially when, you know, we have different opinions on what it is that maybe be coming from the future from these, you know, different currencies like Bitcoin, or, you know, maybe a gold tokenizing, or just going straight back to a gold standard or something. You know, we got to have these discussions, and you got to have like different opinions in order to really understand what it is that's taking place. Hey Simon, did you mistakenly run a no? You know, why do you? I don't know who you are, man. Just Benny, you ask me that a lot, right? And so I'm thinking, like, what is it? You're expecting a particular answer from me so that you can then use that? I don't know. Like, old cars are superior by every measure that matters. Yeah, that's true. UK already raised rates 13 times. Mortgage rates should be 10% and leave it there for 50 years. Hold on. I'm going to pull the car forward here so I don't end up cooking my phone. Get into the shade here a little bit. There we go. Oh, cool. Another super chat. Infamous NYC. Thank you so much for the $5. I'm finally starting to see real estate come down in Pittsburgh, where I've been looking. The houses not selling are starting to come down, thankfully. Yeah, I mean a lot of like, again, like I see a lot of prices coming out of the houses around here, but then again, like, you know, when I saw the prices elevate as much as they have over the last 2 years, even more so, you know, if you take it back further, that the prices that have come out really have not dropped that much to where they were a year ago. Like I mean, the prices have come down significantly, but where they are today to where they were a year or two ago is really not that far off, you know. Thoughts on home prices, time horizon by mid 2024. You know, I don't really want to talk about home prices because all I get is nothing but a bunch of flack coming back from it. I think I've kind of talked enough about it. I mean, as far as my opinion, um, you know, this is the thing. If you really want to see house prices come down, you have to look at inventory levels, right? Inventory is going to say a lot. And right now, inventory is about as tight as it ever has been. And it's like anything else out there, right? Oversupply to undersupply, oversupply to undersupply. And here you have, okay, let's think about it like this. Okay. Man, I'm crazy. When lumber prices were rolling up, right, and it was getting up to 1,000 per thousand, 15 per thousand, 1,700 per thousand. This is like, people were looking at a 2x4 down at the lumber yard and seeing them sell for $13.50, and they went, oh my gosh, and they started going out and buying mills, right? I had a couple of people come to me and say, hey, I have a mill. How do I make some money? They're like, all ambitious about this. How do I get into this? How do I take advantage of these high prices? And I'm thinking, you have already had to been in the game. Like, if you're trying now, it's too late. Because by the time you get set up and get to pumping out lumber, this whole thing is going to be over. But they didn't know it at the time. They thought these lumber prices were going to continue on forever, right? And so with the incredibly tight inventory that was taking place and the huge amount of mill shutdowns and curtailments and everything that was happening before that, left an inventory depletion in the market. So you had this under supply. Right? Then all of a sudden, all these people are jumping into the game and want to start producing lumber. And now, what a lot of people don't realize is that when you mill up your own lumber, you can use that lumber for all kinds of purposes except constructing a house. Right? If you want to actually build a house with that, like use it as the studs in a wall, then it has to be graded, which then is another fee on top of it. So a lot of people didn't realize that when they go and they mill up all their own lumber, that they couldn't actually use it to build a house with, and you actually have to have it graded before you can use it. And so this is really where I think a lot of people ended up investing into like mills, and they became malinvestments, right? Because now I know a few people who have these mills that they just don't operate, like these portable mills or whatever. They thought that, hey, this is a good investment for this high priced lumber. Now, think about it on this scale with home builders, right? There was a time, like we just recently talked about, there was a time when there was a lot of people who built homes, right? There was like, pretty much an average guy really didn't need a whole lot of skills in order to construct a house. Like you just kind of had some basic things, to construct a house. They weren't the greatest built houses, but they weren't really that, that difficult either. As time moved on, it became very difficult. There was a lot of like seismic things and inspections and difficulties that, really kind of lent it more to the professional to build houses, and it wasn't just the average person who could really do it anymore. Even though an average person could do it today if they wanted to, there's no doubt about it, but it's not necessarily in that skill set for the people. So now, really, there's only a handful of people who know how to build houses or can build houses or make money at building houses. And when you have all of a sudden a huge like issue with new sales, right? And this, the interest rates went up, new sales fell off the cliff, and constructing a new home wasn't exactly in the game. Like people who build homes were all of a sudden in a spot that they were finding it very difficult to try and continue on with business, and you had a lot of builders go out. Well, now the demand for homes, the inventory level is really low. The demand for homes is quite elevated. And these home builders out there, the ones that are left, are just killing it because there's nobody really in the game. Right? It was only these handful of people who are in it. So what do I see happening now is that, well, if these guys are absolutely killing it, then people are going to be, hey, maybe we should be in the home building game, right? And so people will start getting into investing into being home builders, right? And then at some point, as this game is really paying off, they're going to have a flood of too many people who build homes. And then you're going to have an issue with that. Now, how far down the road that goes, I don't know. But you see it happening in all kinds of stuff. Like, think about just degrees. Like, when I graduated high school, like, it wasn't like mandatory for you to go to college. It wasn't even really, it was kind of more of a suggestion, for people who were kind of smart. It was like, hey, you ought to go to college. But not everybody was going to college. A lot of people were just going to go right to work, and we all knew it too. But, you know, as of like, 10, 15 years ago, everybody was being pushed into school. Go get a degree. You got to get a degree. If you don't get a degree, you're going to be some sort of loser, right? And now it's amazing on how many people I work with have degrees, right? And it was just like, you don't do anything any differently than what I do, right? In fact, I'm pretty good at what I do. I'm kind of like, not to brag, but I'm at the top of my game really there. I do a lot of sales. I, do a lot of business for the company and stuff. And I work with people who have college degrees, and they ain't doing nothing with them. And it was just like, why did you all go and get this, right? It's the same thing like Cantillon talked about it, as far as like if a nation was to, like, if they were trying to increase their, say, their sea transportation, right? And they send everybody, like, all this a huge generation of people off to go learn the skill of seafaring. And then they all come back. They're not all going to have a job. Some of them are going to be educated into something they can't do, right? But only a few of them can ever actually, do that position. And that's the same thing when you give everybody degrees. Not everybody's going to be able to use them. And you didn't give them degrees. You tricked them into it, and now they're like stuck with it. So. All right, blue bottle, steering wheel cover, and dice. Yep, that came from a fan too. All of it did. Love Western PA, infamous NYC. If gold standard If gold standard will that make our existing money worthless? Well, I mean, it would have to. Okay, how did we even fail from a gold standard to begin with? Right, is because gold was the currency, and then fiat currency was introduced into it to make it an elastic money supply, so that when the economy was ramping up and things were really heating up and this concentration of gold was going to start happening, the Fed was going to be there to make sure that there was plenty of currency in the supplies to keep the consumers going, right? Because if you run out of gold, then you can't consume anymore, and everybody's, the whole thing, the cycle's over again, right? So the Fed was going to be there. Hey, we're going to add, we got this fiat currency, we're going to add to the money supply, and when things slow down, we're going to pull that money back out. That was the whole concept behind it. Well, eventually got to a point where they printed up too much money and they had to pull the gold out. So let's think about it. Like, how would you introduce gold back into our currency, right? Like, how do you do that? Like, you can't, like, if I had a gold coin and I could use it for legal tender, I wouldn't. I'd keep it, right? I mean, I would just keep the gold coin because the gold is better than the fiat. I'd rather use the fiat. See, this is the problem with having two types of currency, is that the good currency will be the one that everybody wants, and the bad currency will be the one that everybody wants to spend, right, or get rid of. And so the good money will end up being locked up and hidden away. So, like, how do you introduce this gold into it then? Right? So it has to be part of the currency itself. Like, it can't be two separate things going on there. So if you're going to introduce it itself, how do you do that? Okay, so you can issue out, like, say, U.S. Treasuries. Right? Issue out U.S. Treasuries with a partial gold backing to it. Say, like, this treasury will be due, and when it's due, it'll be due in a set amount of gold or at an interest rate, right? You can have, like, say, maybe both of these things going on it. And then when it does pay in gold, it doesn't actually pay in gold. It pays in a dollar equivalent to gold, whatever that happens to be, whether it's fixed or, floating on, the open market or whatever. This is like this kind of introduction going into it. Now, if you have the government that's limited in some way to being forced to pay in gold, well, then you're going to have a reverse of what happened when the gold standard left the currency. And that is you're going to have to confiscate all the gold again, right? Because the government's going to have it. So if you can imagine that we go back on a gold standard, well, then we're going to have to reverse what we've done, which means that, hey, y'all going to have to turn that gold back in again. All right, because we're going to start issuing out U.S. Treasuries that are backed by gold. And if you want gold, you can just buy U.S. Treasuries. Right? This is the kind of thing that I see happening from it. Like, I don't know. Like, I don't know how to introduce a gold standard again without completely collapsing the fiat currency and just saying, we got to have something. What is it? Here it is. It's gold. But if you want to, like, try to, like, transition back into a gold standard, you're going to have to confiscate all the gold. Issue out U.S. treasuries backed by gold. Issue out, like, gold certificates that we could use to do currency transactions with, do transactions to have a currency to do transactions with. And then eventually keep taking it back until you can start introducing coins, right, back into the system, stuff like that. And have a very, very limited amount of currency that's in the system. That's going to be very painful for the United States, as we don't really, we don't really produce the things that we want. We import the things that we want. And if we're importing this stuff, then we're exporting our gold. And then we would end up being poverty, because eventually we would run out of gold and we wouldn't have anything, and we would all be like just twiddling our thumbs wondering what to do. I would assume that, like, as that starts to happen, if something like that, again, this is all hypothetical stuff, but I would imagine as that starts to happen and we start feeling the pressure and the pain of the lack of imports coming in, we will start to produce ourselves again. But it's going to be a very painful experience to be there, because, people want stuff for nothing. And with debt, you basically can. All right. How long have I been out here? An hour and a half. All right. Do you know Nick for its Scuffed Realtor stream? I don't. All right. Should look at housing prices in terms of percentages. Helps keep evaluation clear. I remember seeing a roll of 14.2 Romex at Home Depot for $419, a 250-foot roll. Whoa, you should price that out now. It is not, it's like, I don't even think it's half that anymore. In fact, I'm pretty sure it's not even half that. All right, why can't they make housing supply just right? Why can't they make housing supply just right? Okay. Has there ever been a time that it's ever been just right? How about that? Like, there was a time in this country where the manufacturing jobs provided a standard of living in which that a single individual could provide for an entire household, right? That there was a time in our life like that. So maybe it was somewhere around there that you can have the appropriate amount of houses or something, but it was just a moment, right? It was just like this moment in time from going from basically becoming a industrious nation to becoming a full-on manufacturing state, that provided us that moment, right? That perfect Goldilocks moment, that it occurred, but it wasn't going to last. There was no way. And so you can't do it. There's no system in which that it's going to be perfect. Like, it doesn't work like that. And if you could ever show a time in history that it was consistently that way, like it was this perfect thing going on, then I'd love to look at that time in history and say, okay, these were the things that were going on, but I can't seem to find one, because that's not the way it works. So, I'm sorry, I got this like itchy nose going on. So that's kind of unfortunate behind it, but that's really just the way it is. And so you can't have a just right housing market. I mean, I think there can be a moment in time, a Goldilocks moment, but it's only going to be just brief, Simon, do you think America will return to sound money again? According to Jason Jaws, who hosts Bull Boom Bear Bust YouTube channel, which I absolutely love that channel. Great YouTube channel. It says America will return to the gold standard after all the pain. Well, yeah, I mean, that's just the thing. Like, I'm not saying that it isn't going to happen. Like, everything eventually, if fiat currency fails and gold is the only thing that's really going to step up. I mean, cryptocurrency could. I mean, it has the characteristics of being able to do it, but really you got to go to the time and true, right? It's gold. So if you're talking about with pain, then yeah, I can see going back to a gold standard with pain, but it isn't. Again, I mean, I see the issues that are going to come from that, as far as the boom and bust cycles that happen. But it's getting there without pain, Like, I don't see that. Like, there is going to be some significant pain. So, yeah, I mean, I agree. You could go back to a gold standard with pain and lots of it. Happy Sunday, UE and good folks. Oh, happy Sunday to you. What time is it? 2 o'clock. I got bingo to call tonight. All right. It's a shame not more people understand the value of BTC. BlackRock and bankers are trying to get in, and that's just going to make it more scarce and valuable. Again, another reason why it won't work for a currency. I mean, at least not in my opinion. Not any kind of lasting currency because of just exactly that, the concentration. Lots more houses for sale in my area of UK. It's just for summer selling season. Love scoffed realtor streams. It was at the peak of COVID. Let's see here, because there is no money in the affordable home. There's no money in affordable homes. There really isn't. And see, that's the other thing. Like, most people are building houses to sell. Like that. I mean, there are people who build houses for themselves, and it's expensive. And if you could work on it yourself and do it, you could save a lot of the costs that go into a house. But really, when most people are building homes, if you are building like a simple 1,600 square foot ranch style home or something, it is very difficult to make money off of that, right? You got to have all these really awesome killer features. You got to have a higher price tag to it to get the margin, right? Because there's just too much cost and expense that goes into it. If you could build a house for essentially nothing, right? If it didn't cost you that much, a little bit of material, like I remember selling when I was a kid. I would sell what we refer to as a truck buster, right? We had these big dump trucks to make deliveries with. And these big flatbed dump trucks, if you stacked them completely with lumber, like as much lumber as you could fit on these things, and there were like what we would refer to as the wall package. It would be the studs, it would be the plates, it would be the plywood, it would be beams, maybe even some pressure treated on there for the sill plate kind of thing. And that entire package would be somewhere between $5,000 to $5,500, right, for this entire truckload of lumber for this wall package for a house. Right? And I remember at the height of the house or the lumber prices, I was pricing out a 2x6 wall that was 20 feet long, and it was something like $1,200 sheeted, right? For one wall 20 feet long. Now, I can't imagine what it would take to do the floor systems, the interior walls, the roof systems, everything that goes into the house, and at 1,200, like for a 20-foot wall, like I can't imagine. I don't even know what the total price tag of that would have been, but it would have been something like 20 grand, right? 20 or 25 grand. That is an insane amount of money today, even comparatively to when I was a kid buying, with lumber for sale back then. There was people who did it. Like even when I first started, 1995, there was people who were building their own houses, and they were very simple houses that they were building. But it was shortly after that it ended, and it just no longer was a feasible concept for people. And really, it's just because nobody has that kind of out of pocket. Like, if you got to come up with $25,000 just to do your framing package, when before you could do it for $5,000, that's like it's almost like, well, never mind, I can't do this anymore. And that's really where a lot of the average people just got out of it, and they couldn't do it. All right, there are plenty of affordable houses. They're just away from cities, and people want the luxuries and features of living in the city with cheap houses, which you can't have. That's true. I totally agree with that. The reason for not perfect home supply demand is because citizens have the freedom to choose what they believe is the best for themselves. Yeah, that's true. Because I had a guy. He actually met me here in town. We went. I had coffee. He had water too. We sat at the bar. Anyway, we didn't drink. But he was. I believe he was. I think he said he was from Russia, and he was showing me buildings that were like these cookie cutter buildings that they had like pre-paneled concrete pre-panels that came in and like just like in a rector set style, just put this thing together, and they were like these almost like a cell of an apartment. It was just like these very simple bathroom, kitchen, very small, and lots of them. Like they just built a ton of these things, and everybody had a place to be. Right, so yeah, it's not like you had any choice, right? But you had a place. Just saying, that's what he was kind of describing there. But really, when you think about the flow of money coming in, you're going to see when money is at its height, when you have the most amount of money in the system, it's when rents and leases are going to find their highest, right? It's where the demand for somebody is like, that's not something that you can really compromise on. It was just like, you need a place, and places are so limited. This goes back to, as early as you can go back to the Roman times. I talk about that marble tablet that a guy was etching onto, describing his life. And in this tablet, he writes, where does my next meal come from? What happens when I get sick? And how do I pay the rent? These are three things that will never go away. Like there is never going to be a society or a government or a system in which that those are not the questions, right? Where do I get my next meal? What happens if I get sick? And how do I pay the rent? It is always going to be there. There is an oversupply in housing. It's called hotel rooms. Hotels are never 100% occupied. 3D homes can be built, done in $30,000 to $70,000 a unit. All right. Any city becomes dated where people are unproductive. The gold standard is no go, just a bad idea. Gold price is based on fiat pricing above about 65 an ounce is fluff. Also, way too easy to manipulate and index to the average of a lot of staple products. Thank you, Simon, for your input and answering my question. Happy 4th of July. Would you do a collaboration with Jason? Yeah, absolutely. Also, RVs are another oversupply of housing. Hey, Simon, are you looking to do any more collabs with fellow economic YouTubers? Yeah, I will always do a collaboration. There was a time when, when lumber was taking off and I was like, killing it in the lumber story. I had people like asking me to do interviews. Like I had 2 a week or something going on. And really, I haven't had a whole lot of requests to do interviews in a while. And I guess guess my theories aren't like, kicking it like they once did. Guess that's, I guess, it's just a sign. Anyway, yeah, I would absolutely love to do more collabs. Hey, Simon, happy Sunday. Sorry, just started watching. Banks hiding bad loans, commercial real estate in decline, limited home buying. Will the loan repayment be the catalyst to burst these bubbles? Yeah, I don't know. It certainly seems like, the whole commercial real estate thing is really starting to show some ugliness inside of it. But that doesn't necessarily mean that it's going to drag down the house, like the real estate for individual homes. Like that's a completely different market, right? And so, can it end up dragging one down? I could see that. Like, you got mortgage markets and you got a lot of real estate out there, and commercial real estate being one of them, especially when it starts coming into like apartment complexes and stuff like that. You can really start providing a lot more places for people to live, and then the demand for houses come down. But really, I don't see that being the case for housing. Like, I could see where a lot of people might find their place to live, but the homeless right now is so vast that I just don't see how cheaper apartments or even providing apartments is going to bring the demand for houses down. Like, I could see for the demand for apartments being so overwhelming right now that it's going to be very difficult to provide enough apartments for the demand of them. Same thing with houses, even though the situation we are experiencing right now, like even we have an apartment complex here in our town that has basically come to a standstill. Right, it was a huge one that was working on, and then all of a sudden there's no work. right? Like, what's going on? Are contractors not getting paid? What's up here? I don't know the real story behind it. Simon, I apologize. I had a friend who had told me about a supposed incident the other day where they had passed you on the road for driving too slow. Wanted to make sure there actually was an incident. There we go. The other day, Highway 30 is so dangerous. Like, between where I live, the 10 miles on Highway 30 going into Astoria is probably some of the most dangerous road out there, and people will pass on blind curves. And it happened to me Friday. Sarah and I were going into town to go shoot pool with a friend. And on our way into town, I come around a corner and there's a car in my lane. And it's, there's no way that they were going to be able to make it if I had not come to practically a complete stop right in the middle of the highway. Like, I mean, I was about ready to pull off. I was like doing 5 miles an hour. And I mean, I hate to admit it, but I was like, flipping them off and everything. It was like, what are you doing? I come around a corner and here you are in my lane. Now I got to come to a complete stop and get out of the way to prevent a head-on collision. Thanks a lot. Where in the world is it that you need to go, that you need to do this on this little stretch of highway? Because it's only 10 miles. After that, there's passing lanes. There's tons of them, right? Going all the way the rest of the way to Longview. There's all kinds of places that you can pass. But the 10 miles between that comes into Astoria, I don't know how many people I know have died there. I don't know. Every weekend there is wrecks on there. There's people getting life flighted out of there all the time. It is. I mean, they should call it the death highway, right? Because that's what it is. It's sad, and yet I see it happening all the time. Some dude on a bike was passing people like in such a way that it was just like, man, it's just like it's only a matter of time, and it's gonna fail on you, and you're gonna kill everybody. Now they charge you $800 a month to stay in those. Let's see. Up at the Russian places, is that what it was? Liars for friends is no go for me. Sorry again. I don't know what you're talking about. Like, I don't know, maybe. I don't really pay attention to other, like, nobody passed me. I mean, there was people who passed me, but I don't think it's you. All right. I lived in Koreshkevika, and am from the West. They can be made quite comfortable. Or, yeah, I'm not saying that they're like, I'm not trying to knock it in saying that you're in like some kind of prison facility. I'm not trying to say that at all. But what I'm saying is just like at least having the choice of having like an apartment that I could pay a little bit of money for and have a beautiful view in a right town and do all this other stuff and have the freedom of choice to be able to do that. I don't know if that's the same thing that was existing there, because like it seemed to me more like this was like, you don't have any other choice. Here's your apartments, and this is where you get to live. Yeah, and I could be very wrong on that. All right. As long as people will not dramatically lose jobs, Fed will raise rates. No, people are going to dramatically lose their jobs, and that's what the Federal Reserve is actually looking for. They're looking for the unemployment to rise. It's part of their Phillips curve, which a lot of people are going to say, "Nah, Phillips curve, that's BS. Don't follow that anymore." But ultimately, it's the Phillips curve, and that's where the labor is so prevalent. Let me see if I get this right. It is so prevalent that it creates a consumer from all the jobs that they have, right? And so if you have this consumer out there, then the inflation isn't going to come down because everybody has a job to pay for all the stuff that's really high priced. But if they take the unemployment out, if they can keep people from having a job, right, then you don't have the consumer because they don't have any money. So once unemployment rises, that's what the Federal Reserve is really looking for their interest rate adjustments. If unemployment stays low, then they're going to keep interest rates elevated for a while after that, because the consumer is essentially going to be there, right? Continuing to keep the inflation pressures up. All right, Freedom Works, $2. Thank you so much. You're a great source of information. Well, thank you. I mean, I really appreciate it. I have been studying this stuff a long time, and these are some of the theories that I have come up with. I know it contradicts a lot of what a lot of other really good, famous economists or, YouTubers out there are saying. But again, who's to say what is right or wrong, right? I mean, it's at the end of the day, people could say, man, you were right, but you were right for the wrong reasons. All right, whatever, I mean, or they can say you were wrong, but it seemed like everything you were saying was right. I mean, that kind of thing happens all the time. So, what I try to do is really look at this stuff objectively, not from like an investment point of view or from a trying to figure out how to make money like business kind of point of view, but just simply looking at it objectively and try to understand the information as best I can. That's really what I'm doing. And then I come out here and I talk with you guys about it. I wouldn't be uneducated economist without the fuzzy dice. Oh, it wouldn't be the uneducated economist without the fuzzy dice. Yep. Yep, the fuzzy dice, man. It's giving me like it's like like my calling card or something. I don't know. All right. Let's see here. Did they give you permission to pump your own fuel in Oregon? Yeah, finally. But nobody knows how to do it, so the gas stations still pump our fuel for us. I'm serious. Like you go down to the gas station, there's still fuel attendants down there. All right. Well, I don't know about all of them, but in my town there is. But I live in a luxurious town now. Whoever knew? All right, mountain driving has gotten so scary in the past 5 to 10 years. Didn't used to be, but yeah, yeah, and it sucks. Like because that's and it's kind of bummed me out about watching that guy on that bike, man, when he was just tearing through traffic the way he was and passing people and whatever. Because like I could see where people would really enjoy the experience of riding out here. I mean, it's, there's a lot of curves and stuff like that. So if you got like, if that's what you're really into, I could see where like being out here on these roads would be like, kind of a fun experience. But they're too dangerous, right? There's too many other idiots out there on the road who try passing people in blind corners. All right. Hello, everyone. Glad to catch the live today. Hello, Stephen. Thank you for being here. Um, Doesn't broke people lead to violence and despair, etc.? Yeah, it can. All right, get more people on the dole, more control of the people. Yeah. What happens if the whole system collapses? Oh, let your imagination run wild. Who knows? All right. I just listen from what you say and then move accordingly where I see practical for me. And that's really what it is, right? Wait, people literally do not know how to pump their own gas? Yeah, like I was one of them. Like I was sitting there confused. Like I'm like 19 years old. I'm in California. I'm in Northern California, right? I've been driving just a few years. Never had once ever pumped my gas. I pull up to that. And I didn't even realize that like I'm in California, right? I knew I was in California, but I didn't think about being in California. Pull up to the pumps, and I'm sitting there. Like, oh shit, like I got to get out of my car, right? And so it's like, okay, now what do I do? Like, I want to fill up, but I don't know how much to fill up. I don't even, like, do I go in and, like, if I got to pay, how do I pay without knowing how much I have to pay? Do I just give them a bunch of cash and then go back out? Like, like all these questions started coming up. Like, I didn't know, I had never done it before. So, yeah, it's like a weird experience. And then once you do it, it's just like, oh, that's like nothing to it, right? You just pump your gas. It seems so simple now, right? But yeah, at the time, like they literally, the people had never, ever, ever pumped their gas before. you know. Uh, well, then we go down to the pub, have a pint, and wait for it to blow over. Yeah, that's. No, I mean, if you're really worried about a total and utter collapse, and you really have to understand how the monetary system's operating and why it would collapse, and then you protect yourself from that by getting into cryptocurrencies and Bitcoin, and you know doing the prepping thing so that you have ways of preparing food or defending yourself or preserving food. I think preserving food is probably one of the best skills that you can have for prepping. Um, really having a bunch of jars, lids, and rings, and the ability to know how to can food. I mean, really, that's probably one of the most useful skills that you could learn for prepping, right? Because it's something that you can use even if you're not a prepper. I mean, it's just just common yearly things that you can do. I remember, like, my wife, she brought home like this giant box of carrots, and I don't know, I was like, what are you gonna do with all these carrots? And she goes, I'm gonna make juice, and she kind of like gave me this snarky kind of response. And I laughed about it because she cut it all up and put them in, and she jarred it all. That's what she did. She had canned carrots, and she just got a really good deal on this case of carrots or this box of carrots, and so she canned it all up. But like, I remember she bought it. I was like, what do you, I'm gonna make juice with it all, Anyway, all right, final comment. The next time you host your show from your truck, get a pair of fuzzy dice with white dice and blue dots. Oh, that's interesting. Do you have any ideas for passive income? When we get old, we need cash flow, but we can generate it. What can generate it? Not that I'm a financial advisor or anything like that, but I like the dividend paying stocks. I think that's kind of a good way to go, and then kind of be vigilant on your stock portfolio on which stocks to hold. So if you get good at, like, looking at companies and looking at dividend paying stocks or something like that, that's one way of doing it. Um, rental income is probably the most common, way of becoming, like, I forget what the percentage of millionaires there are that got rich doing real estate, but it's an ungodly amount. It's like 90% or something like that. So really, like, real estate is the place you want to be if you want to have any kind of like proven income, right? That's really where it's at. But there's a lot of places you can end up going into. Like I said, the dividend paying stocks or rental incomes, and then doing some stuff that's kind of outside the box, like the YouTube videos. If you do a bunch of how-to videos, ones that are lasting, and like ones that'll like carry on for a long time, and you build up a good channel like that, those how-to videos, they can continually make money. Like my videos on my channel, they do pretty well, for the most part. But like within the first 2 weeks of putting them out, but then after that, they really like start to taper off, where you don't really get a whole lot of views on them. So I have like 1,400 videos out on YouTube, but they're not all being watched all the time, right? I might get a view here and there on one of them, but that doesn't really like bring in continual income. Like if I was to just stop making videos on my channel, then the channel wouldn't do so well, because my channel is all about doing videos that are current, and being consistent with it, and being kind of up to date on what's going on out there. And like stuff that you hear from 2 years ago, it might be good reference or something like that, but it's not necessarily that it's going to catch fire and people are going to be watching on a regular basis, not like a how-to video would be. So that's another way to generate income, is just doing like how-to videos on YouTube and building up an audience that way. Even dishes every day, right? My wife's channel, she's built up a subscription base that on her own up to 100 subscribers, doing chores around the house for ASMR stuff, and like just the visual effects, or maybe the sounds or something that's going on that a lot of people are finding appealing on YouTube. I mean, I've watched a few of them, like these ASMR things. Sometimes they're kind of like neat. You're watching somebody like maybe rebuild a carburetor or something like that, and they're not talking, they're just doing the work on it, and it's kind of fun watching them put all these pieces together. So stuff like that. There's a lot of ways to generate, passive income. I mean, YouTube, I guess, is like a semi-passive. You put it out there and then you kind of watch it happen. So you have to be kind of like active with it. I don't know. Amazon, you can do like filled by Amazon sales. Figure out a product that that you could sell on Amazon, and have Amazon basically package it up and ship it and all that other stuff. There's that way of making money. There's a lot of ways of making money. You just kind of have to get creative at it, and and then a lot of it also takes like time and work. So you have to put in like a lot of effort in the beginning in order to get something out of it. But that's like almost everything out there. You have to do that. Canning is underrated knowledge. Absolutely it is. And that's where I was thinking Dishes Every Day should do some canning videos. It would be fun to watch. Dividend stocks, where does passive income come from? To me, passive income does not really exist, but you can have income that is low maintenance, and you have to check up on it every now and then. Yeah, absolutely. I agree with that. There's no real passive income. There's like even the dividend paying stocks, you have to be like, paying attention to the companies, make sure you're not holding on to a bunch of companies that are going to fail or something. I have buy an apartments in Romania. Bucharest. Yeah, I pay rent now. In a few weeks, I move there. The rent is 330 euros. Mortgage will be 275 euro. Wow. For dividend stocks, go consumer staples right now. Okay. Benny, yeah, drop shipping is great too. Good call, Simon. Well, thank you. Oh, hey, Infamous NYC. Thank you so much for the $5. I do dividend stocks and hold growth tech stocks and write calls either monthly or quarterly, besides my nursing and now looking at real estate for rent. See, now there you go. See, these are all the things, like, many different places, many avenues of income. Um, I forget, what was it like? I forget. It was like the average like millionaire or something like that has 5 different streams of income or something. I can't remember what it was, but it doesn't take a lot to get started. It takes a lot of time and effort to continually do it to the point that it actually is beneficial to you. But it's not like it's really that hard. It's a matter of being committed to it, being disciplined, um, opportunity, having the opportunity to actually be able to do it, like, having the income and the low, cost of living or something like that. There's that, but really after that, it's really not that hard. It's a matter of just like kind of figuring out a particular direction and then going with it. Bitcoin seems to be the way to go unless they outlaw it. I don't know. I mean, it could be. I'm buying into Bitcoin. I'm going to try and get a hold of one. I'm at just about halfway there. So, yeah, I'm looking at property right now. Good for you, Infamous NYC. That's perfect. I know a few people who are looking at it, and I too am looking at it, but I just don't know if I'm quite, if that's really what's drawing me, to do it. Like, I listen to Lumberjack Landlord and I get like really like pumped up. Like, man, listening to him, it's just like, man, this is the direction I should go. He's very confident in what he talks about and everything, as far as like people can do this, it can happen. And so I listen to a lot of the positive things. He shows the negative too. Like, I mean, if you follow his Instagram, he's always showing like how people have trashed his place or, some of the things he has to deal with and stuff. So it's not like he's just, singing about the home runs all the time. He talks about the issues that come up from it as well. Now, personally, I work at the lumber yard, right? And I have a lot of homeowners who come down, or landlords who come down. More, that's who I should be talking about, is the landlords coming down who complain about the condition of their properties, about their tenants, about, stuff that happens, all these issues that are constantly up there. And yeah, they do talk about some of the good things that come from it too, but I see a lot of the nightmares, especially down there at the lumberyard. You hear a lot of stories of it. So you don't really typically hear those stories from people who are talking about, like, people getting into it. They don't necessarily tell you all these horror stories that come out, but I'm like right in the middle of it where, I'm just watching it taking place. I'm not even like looking for it. I'm just hearing these stories coming up from, my customers who are down there shopping. Personally, I think, like, for me, the direction that I should take is, to do what I'm doing here with like, the Uneducated Economist, taking on that idea of even doing like that little the Wiki up Grange, doing like a little speaking engagement there. I think that would just be fun. If nothing else, it would be it would be practice. It would be, a lot of fun for, the people to just come and hang out and maybe just have a, like a workshop discussion on, maybe different things that they're, a little confused about, and we could have conversations going on that way about it. But I don't know, like, to me, that seems the direction I should go. Like, you follow your passion, right? And I have a lot of, interest in economics. I love talking about it, and it seems like it's something that I could, keep doing to make money with for the family, and, build up a decent, retirement and life off of it. That would be just amazing for me. I don't want to do it I don't want to do it with the sponsorships. I mean, I really want to do it without that. I needed it for a particular reason, and I reached that goal, for what I needed it for. And, I mean, I'm not going to do it anymore. I just doesn't feel right. It doesn't feel good for the channel, and I don't think you guys really, like it either. So, do what feels right. Okay. Uneducated Economist, you should try making a Discord server or forum and monetize it somehow. Okay. And going to talk to brokers soon for that. Okay, commercial property is my passive income source and probably main source. Longer leases, utilities, taxes, and maintenance paid for when you have NNN. The appreciation in value is why landlords tolerate tenants. Bullshit. Yeah, I totally agree. And that's really what I found from a lot of the landlords who have been doing it for a long time. That's like, it was worth it to them. Like, a lot of times they say, man, I had the best tenant in the entire world, 20 years, paid every time, did all the maintenance on the place, never ever heard from them, right? I mean, it was like that does occasionally happen, but for the most part, they're looking for somebody to make the payments on the property so they don't have to, and then eventually be able to sell that property off for a profit, or to have it as part of their, as part of their estates. Infamous NYC, thank you so much for the $10. I think buy a nice property for rental income in a decent area, 1 moderate and 2, 3 on the lower, then buy land and create an attraction that will bring in people. Now you have all types of income. Takes work. Absolutely. And that's in, having that kind of mindset. For, like, my wife, she's interested, she's really big into cooking. Like, she loves preparing food. She's worked in restaurants and done, like, catering events and stuff like that, where she worked for, different companies. She really enjoys that. And, we talked about, owning a food truck at some point. Like, that might be something that she would really enjoy doing, is like, operating out of a food truck. That would be something I think would be like, just a kick in the head to do. It's just like, just because I think that would just be fun, myself. But, it's just another one of those things to look for. And if you can build up a food truck that is, decent enough, you can hire employees, and now you got a little business running, and you started it off by just selling, something that you created and people find appealing. You might be able to find sponsorship that feels right for you. Set your own terms. No, I agree. And to be honest with you, I still might do it, and I haven't talked to him in a couple of weeks, but I was gonna do like sponsorship for Lynette Zhang. She's my friend. I could call her on the phone and talk to her. We've met in person several times. She treats me like like one of her grandchildren or something, or her own kid. Or, I mean, it's just like, she gives me these big old hugs and, asks me, like, about my personal life going on, like, really is curious on, what it is that I have going on and stuff. So, like, I appreciate Lynette. Like, I think she runs a good business. I've purchased metal from her before. My mom has. So it's like, that's a company that I don't necessarily, like, am like, hey, she's like the place that you have to go to, but there's a lot of places you could go, and I know Lynette, right? So it's just like, it would just make sense for me to, like, promote somebody who I appreciate, who I feel is one of my friends. And it's not even like anything. It's just more of like just referrals for contacts. It's not even like you don't even have to buy anything. It's just like literally set up a meeting and that's all it is. That's what the sponsorship's all about. So it's not even like trying to sell anything. It's just literally go and talk to them and find out what it is that they could possibly do for you. And that's literally the entire sponsorship. So I mean, I'm very much considering that one. And like I said, it's been a couple of weeks since I've talked with them, and I was supposed to get back to them, earlier than that, and I kind of had some other things going on. So, you know, ITM trading is, one of the sponsorships that I might pick up, and I think that's like very much in line with this channel and, and the viewers of the channel. Hey, thank you very much, Stephen, for the $4.99. Thanks for your insight. I got a degree in economics, and they didn't teach anything about Cantillon and how the real economy works. Yeah, isn't that amazing? It's because they want to make sure that you really understand Keynesian economics, and because Keynesian economics is really what we all live under. That's the only one you really have to understand is to have a degree or a career or to do anything with these businesses out there, is you have to truly understand how Keynesian economics works. You don't really have to understand the theories or anything else that's going on out there, because that's not the way we live. We live as Keynesians. I don't appreciate that. Like, that's not like something I think is good. I don't think that at all. But when it comes to like the education system and what they are teaching the people, there's no point in teaching them anything other than how to operate within the system that is existing. And that's what's sad about it all. It's like, here, we'll keep the rest of the secret, because if you knew that, then you really probably wouldn't like it at all. Thank you, Stephen. I really appreciate it. All right. Man, 2 hours. Okay, I'm going to give it like another 10 minutes, guys, and then I got to go because I got bingo to call and I got some other things I need to do before I go and do bingo. If you're in the Astoria area, if you're ever in Astoria and you want to come and hang out, I call bingo every Sunday night down at the Workers. It's right underneath the bridge in Astoria. Starts at 6:30, goes to about 9. Usually there's anywhere from 20 to 50 people there if they really get if we get a packed house. But come down and hang out, and it's a good time. You can watch me do some bingo calling, and it's fun. It's like a lot of crowd participation, a lot of jokes, and we have a lot of fun. It's not your grandma's bingo, unless she drinks a lot of whiskey, then it might be your grandma's bingo. All right, Uneducated Economist. I am sure you can think of neighborhoods that went from garbage to gold. Think about what the value was when one wanted the neighborhood to when everyone wished they could. Yeah. Live in. Everyone could live in. Yeah, I totally agree. Like, that's where, like, Astoria was when I graduated high school. Like, Astoria used to be a really dumpy little town. Right? It was kind of dumpy. And it was full of loggers and fishermen and dive bars. And that's really what Astoria was. But then things started changing and it became very trendy, right? And next thing you know, there's only a few dive bars left. And all the rest of the places are these trendy little hangouts. And the hospital district gets huge, and all these people who work for the hospital now are living in the area, and retirements are starting to come in, retirement community starting to build up, and like the working classes is finding it very difficult to be here, right? You can't just have like a regular average job and expect to make it. You got to have like an average job and a YouTube channel. You got to have like career in something that is like a business that's doing quite well, or work for the hospital or something else that has a high paying job to it, or otherwise it's very, very difficult to be around here. But 25 years ago it wasn't. Like my buddies who worked down at the restaurants could live here. They 2 or 3 of them would group up and rent a house together or something like that and totally have all the money they needed. But not now. It doesn't quite work the same. All right. How will we know we are in CBDC, as they know this name has very negative effects, extreme fast transactions? I don't know. I thought of the food truck thing as well, as I was looking at farmland and starting a small orchard and selling meat and fruit from a food cart. There you go. Long as you have vision and you will go places. That's it. I mean, and that's very true. You know, you have to. There's a few things like when you're pursuing stuff like that. One of them is that you kind of really have to let go of the money, like how much money you're going to make doing this, right? You really have to look at it to make sure that you're going to be able to profit and pay back loans or whatever it is that you're doing. But you have to kind of let go of that part of it and really go for like making the best product and just and making sure that people know that it's there, right? And pushing that out there. If you can push out a good product and people are aware of it and you're in the right location, figuring all that out, then the products start selling themselves. It makes it very easy. But it's a matter of figuring that part out, like, making sure that you have the right image, so to speak. Like, people look at a dumpy dive bar, they may not want to go into it. But then again, that might be the place that is appealing for them, right? So having a dive bar isn't necessarily a bad thing. That's what a lot of people are appealed to, find appealing. Other places, people want the trendy, high-end music and all the fancy people and drinks and food and all that other stuff. That's the place that they want to go to. So you really have to kind of find that market. But once you do and you move forward with it, really, it's not that hard. Like the universe wants you to succeed. Yeah, I don't know if people really know that, but the universe really wants you to have abundance of mass, right? The only problem with it is that we as individuals end up putting ourselves in a position in which that we don't allow it to take place. We put all these obstacles up in front of us. We have to make this much money. We got to be able to, do all this stuff, and we don't let go of a lot of these limitations that are out there. And when you let go of the limitations that are existing that we just don't even realize we're doing to ourselves, then the universe is like, here you go, man. Here's all the abundance that you want. A lot of it, like even being out here on YouTube, doing the YouTube videos, when I first started putting out videos, it was hard. It was hard to like say, okay, I'm going to put this video out and I know that people are going to make fun of it. I know that, it may sound weird or stupid or, something in that sense. And I have to like get over that. I have to own that, right? Saying that it's not something that bothers me. I stutter, I make up words, I don't talk in complete sentences or whatever. I don't care. Like, I mean, the information still gets out there, and that's what I'm trying to do, is make sure that I can do that part of it. The rest of it, I had to let that go. It was just like, okay, man, so you stutter when you read, you whatever, you don't know how to pronounce words. Don't worry about that part. Just get out the information and try and be as entertaining as possible. And that's what I did. And then when I noticed that people were watching, I was like, holy moly, I have a product. Like, this is an actual thing. I can do this. And then, man, now I started putting out videos and they started coming a lot easier. And I can do live streams and stuff now. But I had to let go of a lot of like my own hangups, Hey man, it upsets me that the education system isn't really meant to educate. Yeah, it's really not. The education system, especially when it comes to economics, is really meant to provide you with the ability that you can function as a good slave. I mean, that's really what it is. Make sure that you know how to pay your taxes, that you can balance your checkbook, that you can do this stuff. But they don't teach you anything about like how the money flow works, about how it is that the concentration of wealth can be easily done once you understand it. It's they don't teach any of that stuff, because if we did, then the whole system would fall apart. So they can't. They like literally the system can't. And like the teachers don't even know it. Like, I mean, I have educators who come to me, and say like, holy moly, man, I love your channel. I love what you do, and these are people who are teachers, like that's their job is education. And they tell me, it's just like, man, I love the work that you do, So I know like this stuff isn't taught, not like this. Like, if I was to teach somebody about economics, it would be taught in a way that nobody else would ever have done it. Like, I mean, my understanding of economics is unique to me. right? It's a combination of other people's theories. True, right? I mean, I put all these parts and pieces together, but just like a mechanic didn't build the car. Like he can build a car, right? You can take all the parts and pieces, put it together, but he didn't build all those parts and pieces. He had to go and get them and assemble them, right? And that's the same thing when it comes to economics. It's very much like understanding mechanics. You got to find all these parts and pieces and put them together to realize, okay, how does this thing really work? You know, a lot of times if you're looking at economics from a particular point of view, you're looking at it from an investment point of view, right? Well, then you don't see it from a political point of view. If you're looking at it from a political point of view, then you're really going to miss it, because then you're not understanding it from a monetary point of view or a banking or, you know, business cycles or anything else. You're looking at it from a bunch of dipshits who are talking about it, who don't really understand it, you know. And that's what's quite unfortunate. And I don't mean to, like, you know, knock anybody who uses politics to follow economics, but I was somebody who was incredibly involved in politics. I followed closely up until Ron Paul was blackballed out of the Republican Party, and I gave politics the finger after. It's like, I'm done. In fact, I was done with everything after that. I didn't follow anything for a very, very long time. I was so disheartened by that. And I was just like, okay, forget you guys. I'm done with you. I mean, I'm just absolutely done with all this. And, you know, for like 2 or 3 years after that, I wouldn't even so much as carry a cell phone. I didn't look at the internet. I didn't use a cell phone. I did my job. I went to work and I came home and I played with my chickens. Right? And that's what I did. And that's all I did for like 3 years. And then it was after Edward Snowden. Edward Snowden, when he came out and said that, hey, you know, everybody's being tracked on their phones and stuff like that. It was after that that I was just like, oh man, okay, well, I was protesting, and so now my protest is over. I want a phone, right? And then when I got the phone, and I was just like, okay, if you're going to start researching again, stick to the money. Just stick to the money, monetary policy, central banking, and don't deviate from that. Just stick to that. And I did, and it worked. It totally worked for me. You know? I think that breakaway for those 3 years really is what did it, because everything I looked at was politically motivated. Everything. It didn't matter what it was. I put political motivation behind it. Right? Now I put economics. Like everything I look at has some kind of economic event attached to it, you know. And so it's all about the meaning you give it, right? If you want to put meaning behind it that says this is political, then that's exactly what it is, right? And if you want to put meaning behind it that says this is an economic event, that's exactly what it is, right? And it could be the exact same event. Steve, man, thank you so much. $10. A lot of people are buying raw land as a hedge against inflation. No cash flow, just paying property taxes. I think they should be in cash. Thoughts? Um, if the property taxes are low, right, are really low on it, then I would say land is a good investment. Simply because you cannot produce any more of it. There is only a limited amount of it. And if you have it in a location that is going to be desirable today or going to be here in the future, there's nothing that can really beat that, right? I mean, is like it, it's really one of the ultimate assets to have, right? It's nothing. I guess it could be taken away from you, and then, you know, in that sense. But if you have a government that's, you know, that believes that's, you know, willing to stand for property rights, then yeah, like property, I don't think really is a bad way to go. Especially in a good location. You know, if you're like, you know, way out in the middle of nowhere and you're buying 1,000 acres for $10 and you're thinking, "Ooh, look at all my land." It may not be the greatest location in the world. You know, it might not do anything for you. So really, that's like, I think land is a good one, especially if it's in the right location. Um, but as of right now, I think a cash position is a really good position to be in, because I think things are going to get really cheap here over the next year. All right. You need to put the land to use. Yeah, it's got to be useful at some point, you know. Bingo. Relax. Scarcity versus abundant. You okay? Yeah. Yeah, that's true, right? All right. What is your take on financial advisors? Um, my mom went to a very fairly well-known financial advisor and started like, because my mom is really like over the last couple of years has really started getting into the macroeconomics. Like she is fans of every like I took her to the Rebel Capitalist with me because it was Mother's Day weekend, right? So I took her to the Rebel Capitalist with me. Her and I went to Orlando, and I don't think I could have taken anybody who would have appreciated all those speakers more than my mom. She is a huge fan of everybody there. And I tell you, like, when she went to a financial advisor and she just kind of talked about some very, very simple topics, stuff that we cover all the time. Like, I mean, we like it would just be common stuff for us to talk about. She brought up a couple of these little things to this financial advisor, and he says, you're a real unique one. Nobody ever asks these questions, right? And so that's probably what most financial advisors end up dealing with is a bunch of people who have no clue of what it is that they're doing or even have any kind of questions to ask. And so like I think a lot of them probably don't know what they're doing themselves, right? And I've heard like people say like the financial advisor was saying that, the markets went down 5%, but we only lost 1%. That was pretty good, huh? And I'm thinking losing anything is horrible. No, 1%, a half a percent, a tenth of a percent, too much, right? It's too much. You shouldn't have lost anything, right? And so if a financial advisor is saying that, I don't know, I wouldn't agree with that, but I'm not a financial advisor, so what would I know? You're naive if you believe there is scarcity. Look outside, buddy. Yeah. I like dislike all politicians equally. Who are you talking to, Benny? All right. I was a big Ron Paul guy and then a big Bernie bro, and now I hate all politics. I was never a Bernie fan. I mean, I like some of the things he said because they sounded good, but I didn't believe. I mean, I'm listening to him and I'm like, yeah, that's that socialist stuff. I can't handle it. All right. I don't hear for advice. I just listen. Well, good for you. Code for Bath. That's what I would appreciate is that people are here to listen and to make their own decisions for themselves. That's what we're doing. That's like, it's one of the things like I don't listen to other economists out there and go like, oh my gosh, they totally disagree with everything I say. I got to change everything that I'm doing. No, I don't do that. I listen to what they say and I'm like, okay, I understand that point of it. And I mean, I've taken that kind of understanding myself, but I'm seeing it from a different point of view. And this is the way I'm going to, look at it. And that's again, like, everybody looks at the economy from a different point of view. And we've used the analogy of being out on the river on a boat, right? If you're driving one of the, if you're up driving, if you're piloting one of those giant freighters out there, right? And you're out here on the Columbia River, and there's a guy out there in a 12-foot duck skiff, right? Who's out there running around on the river too. Those two people, even though they're out on the river and they're both on water vessels, watercrafts, right? They are not even doing the same thing. They're not thinking the same thing. They're not reacting the same way. They're not looking at the conditions the same way. They are not behaving anywhere remotely close to what they to the other, right? They are operating completely independently, differently, and doing obviously different things, right? But yet they're both on boats out on the river, right? I mean, so this is the same thing for the economy. Depending on the position that you're in and what you're doing, what you need in your life, you're going to look at the economy and give meaning to it so much differently than somebody else will. And so when you hear like somebody else talking about it, it's coming from a different position, a whole different meaning and everything that goes with it. So yeah, it's important to listen to other people, especially important to listen to people that you disagree with, like you don't agree with their points. Because if you listen to people who you just agree with all the time, then what you're going to end up with is missing out on information because you're just taking in stuff that, is just biased to your own beliefs. Yeah. Now, this dude calling boys deaf fighting words. Oh, it's okay. Thanks, I agree. Thanks, okay. Yui, I'm not talking to you. Sorry, this guy is. Oh no, you guys are cool. I thought you were talking to me. You guys have your own conversation. It's all right. Hey Tim, wow man, thank you so much for the $50. Please do a video on the exchange rate of the dollar and other currencies, specifically the peso, and your thoughts on the future. Okay, well, I'll do a little bit more research so I can actually bring up some topics and talks about that. But the dollar is growing stronger against a lot of currencies out there. Now, I understand the Mexican peso was doing quite well there for a little bit, but you're going to find where that's going to start changing around here, especially if the balance sheet and the M2 money supply continues to drop. Like we've had that, where it was dropping, but then when we had the banking issues taking place there a couple months ago, it stopped dropping and started going back up. But I have a feeling that we're going to start seeing significant drops to that again over the course of the next year or so, and that's going to put a liquidity issue amongst the entire world. And at that point, the dollar is going to grow pretty strong, right? I can only assume that this is going to be the case. And obviously, like, if more information starts to come in or things change, then that will change. But as what I'm seeing right now, to me, if the Federal Reserve is promising higher interest rates and more balance sheet roll off, I'm just assuming that the liquidity is going to tighten up and people are going to be demanding dollars, and the price of it, or the value in the exchange from dollars to whatever currency out there is going to be a strong dollar and weaker whatever, right? Whatever you compare it to, no matter what it is. But that's going to be short-lived, right? It's only going to be for the next year and a half. Once that turns, then I think you're going to have a dramatic change to the opposite of that. As these other currencies begin to grow strong, and the United States is going to be like, hey, we're trying to increase our manufacturing or whatever and increase our exports, and with these stronger foreign currencies out there and a weaker dollar, then that would increase the exports. Now, whether or not all that stuff happens, again, this is kind of me just thinking out loud briefly about it, but I'll do some more research on it so I can talk more in depth on that for you. Thank you, Tim, for the $50, man. That is very, very cool of you. Thank you, sir, for that support. All right, I'm just saying there is no scarcity. Oh, you guys are still talking. Okay, I'm going to let you guys go on with that. The Mexican peso has been one of the most stable currencies. DXY, the pound, the yen have all had a lot of high and lows. Yeah, and it does make me wonder how, because there's a lot of manufacturing that is moving back into Mexico. It's like leaving China and going to Mexico, Vietnam, Mexico, Malaysia. There's a bunch of places that it's going, but Mexico happens to be one of them. And I'm assuming this is because of the short distance to the consumer, to the United States, right? So if you have a shorter distance and you have these supply issues, like, with freighters or whatever, then it would make sense that you would want to bring manufacturing to Mexico. They're also finding like the labor there to be competitive against China, since their Chinese labor has moved up kind of a lot as well. But now I think about like the trucking issue that we have going on right now. If you haven't been following trucking is in the toilet. Okay, so the amount that truckers can charge, right, for freight, right? It doesn't really quite go like that. Trucking is a very weird kind of system, the way it operates. You have shippers, people who have things that they want to move, right? And you have the freight, basically the brokers of truckers, right? It's the people who are buying these things to try and sell them and move them. And then you got the truckers who operate, right? Who are then in this, basically moving the material around. In between all these, you have a commodity of available things to ship, and then the available amount of truckers looking for things to haul, right? And the amount of truckers looking for things to haul is huge right now. The amount of stuff to ship is really low. And now with this is putting truckers in a pressure of like going out of business, right? And you're starting to see that taking place. Again, this is due to the malinvestment that had taken place during the supply chain breakdowns. As the supply chain breakdown was taking place and there wasn't enough truckers to get the stuff through the system, they were going to hire like the National Guard. Remember that? So anyway, the price, or what the truckers were getting to haul stuff around, had really elevated to a high, right? So in order to take advantage of that, Truckers started expanding their business, right? Just like anything else out there, they started buying, more trucks, hiring more drivers, doing whatever. Well, they overexpanded their operations, and now there's too much available trucking for the amount of stuff that needs to be shipped out there. So I have a feeling that the advantage of relocating to Mexico because of the shipping cost won't be there, right? That shipping cost is going to come down, and then that advantage will disappear with it. They still have a bit of a labor advantage, but that's the only other one I would see. So at the end of this, is Mexico really going to increase their manufacturing export, or will that be a malinvestment as well? I mean, I think it'll actually probably be all right because, like I said, the labor part of things is now competitive with China, and being closer to the consumer, the United States, that's just going to be better for them. So I don't really see it being a negative for Mexico, but it could, right? If you do a lot of malinvestment into Mexico, thinking that you're going to take advantage of a shorter distance in labor, and then the labor goes up for whatever reason, and then the shipping wasn't really that, wasn't that expensive, then that ends up being a malinvestment. Anyway, not saying that's what's going to pay. Again, I was just thinking out loud. Okay. You're saying the Fed will launch QE in the next year and a half? No, I am not. No. I'm not saying they're going to launch QE. QE would be the active purchasing of treasuries and mortgage-backed securities. That's not what I'm saying. What I am saying is that they are going to lower interest rates, which is different from doing quantitative easing. Although a lot of people will associate those two to be the same thing, it's not. The adjustment of the Fed funds rate is not the same as money injection going into the system, and so there's a difference inside of that. Now, whether or not they still have the repo facility and the interest on excess reserves, or if the excess reserves turns into a limited reserve, right, like they once had, and then the effective fund rate moves over to the interest on excess reserves, moves over to the overnight lending rate as opposed to the interest on excess reserves, then at that point you can start adjusting interest rates down because it's on a limited reserve basis, and you actually continue to take reserves out. Like you can actually continue to pull your liabilities out of the system and take it to a limited reserve basis, and then in that sense never have any kind of QE or money printing taking place. But I don't know. I mean that I don't think QE would be taking place at that time. All right, what time is it, guys? I got to go. I said I was going to go 15 minutes ago, and I'm still out here. But, you keep sending me the super chats and the questions, and I can't help myself. Okay, what do you think about Bitcoin ETFs? I don't know. It's hard to say. I mean, people have asked me about that one before, and with the Bitcoin ETF, a lot like, the silver ETFs and stuff out there, it just adds to more speculation in the ability to manipulate the price of it, right? Now, whether or not this is going to be a good or bad thing, I honestly think that when you add more products, more stuff like that into it, it's a good thing, right? But when you have situations where you have the silver suppression that is happening with the 150 paper ounces of silver for every physical ounce of silver that exists, then you sit in a situation in which that buying silver and holding on to it with the anticipation that you're going to be able to sell it into the future for a higher price really loses its appeal when you have so much manipulation happening inside of it, keeping the price suppressed like that. So if that sort of thing happens in Bitcoin, it can be very discouraging to be in Bitcoin. But I look at it as a positive. I think of it as okay, cool. That's adding that's adding, what's the word for it? What am I trying to say? The validity, the value, I don't know, but I'm anyway, it adds I don't know, makes it more of a real instead of imaginary, even though it's still imaginary, but it puts it into the idea that regulations and different things like that make it so that it's actually something that is looked at in a real fashion, that is part of your banking schemes or something like that. Yeah, anyway, I don't know. I got to see. I'm like on the ETFs. I just kind of want to see what happens, before I really have any kind of committed idea to what that is. What's the most ideal way to hold on to Bitcoin long term? Me personally is to secure the private keys. I mean, now I know a lot of people say don't ever write down your private keys or whatever, but I lost the private keys to an Ethereum wallet, and I won't make that same mistake again. I personally keep most of mine at Coinbase. A lot of people will be like, dude, don't keep it with a third party. That's the worst idea ever. That's true, but I've already lost Ethereum, so I'm not too concerned about Coinbase. I think they're out of all the places that you could possibly keep your money, keep your crypto with a third party. I seem to be okay with Coinbase, but again, that's your own personal choice on it. I mean, there's no reason that you should trust them. Credible. That's it. That's my mom right there. Thank you, Mom. It makes it more credible. My local bank offering 5% CDs. Yeah. Right on, guys. Okay, I'm gonna call it. I think this was a great live stream. This was a lot of fun. I cannot believe how much great questions you all had. This was a very good conversation to go over and listen to again. 2.5 hours might be a bit long, so there's some definite key points in there that I might try and see if I can't pull out for shorts or something like that, because that's what I really should be doing with a lot of these live streams, is cutting them into smaller segments for us to listen to. But thank you everybody for sending me the super chats. Love the support. Thank you so much for that. You know how much I appreciate it, and I can never thank you guys enough for it. Yeah, Uneducated Economist. You guys let me know. All right, good to see you. Have a good day. Thank you, Simon. Thanks, UE. Yeah, thank you guys. Uneducated Economist. You let me know.